Hi everyone, very good morning. Hopefully I'm audible and visible to you all. So quickly write down into the chat box if I'm properly audible and visible to you all. So we can begin our discussion. And I know it is today is Sunday, so it's quite difficult to wake up early and join the session. But it's great to see you guys that even on Sunday you guys are ready to study. Yeah. So thank you so much for responding. Thank you. Good morning, everyone. Very good morning. Yeah, thank you so much for responding. So what we will do, we will continue the syllabus. Acha, before I start the discussion, definitely what I will do, I will revise what we have covered in previous lecture and then we will proceed ahead. But I would like to know your queries. Do you have any question from the concepts which we have covered in previous lecture? And you can let me know your queries if you have any queries or questions. My name is Ankit Bajaj. Yeah. So any question would you like to ask from the previous lecture? I will definitely revise everything what we have covered in previous lecture, so you will be able to understand right what we have discussed till now. But still, I would like to know that if you have any query. Uh, great. So I will request everyone, right, that kindly turn on your camera if possible. So we will be able to, interact more about the formulas. No worries, no worries. So what I will do, I will revise everything first. We will do the revision. And then what we will be doing, we will be proceeding ahead and we will be discussing more concepts. So you will be getting more clarity. Right. So if you remember, actually, I have already shared the Excel sheet and also I have uploaded the PPT in your drive. So you can go and download the PPT and Excel sheet, right, which you have requested. So quickly we will revise. Yes.
So where is the like where we can see that I'm not able to find
Actually,
the
you're not able
like
to find in LMS, when you will go and click on the course, right? There's the option of course. So once you will log in, once
okay
you will log in, right? Then second option will be that you have to choose the course, right? So you will choose the course that is going to be CFA L1 course. Now, once you will select the CFA L1 course, right? After that, in right hand side, you will be able to see the various options. Right? There will be a tab where you will be able to see the various options. So there you have to select on the courses. Right? There, what you have to do, you have to select on the courses. So once you will select the courses, so one thing, that question which we have to solve and how that question do not have A and B, then how to solve. Today, we will solve somewhere around 20 MCQs, right? As you guys have suggested that we should start solving the MCQs. So I brought somewhere around 20 MCQs. We will solve those MCQs, right? Which we have to solve in homework. Acha, you're saying that there is no option. No problem. I will do it today. I will do it today. And we will solve MCQs also, Path. Don't worry, we will do it. So once you will click on the courses, right, then you will be able to see the subjects. Then once you will click on the courses, you will be able to see the subject, right? And you have to select the economics, right? You have to select the economics. So once you will select the economics, right, then you will be able to see the session there. So you have to select the session number one, right? You have to select the session number one. Now, once you will select the session number one, right? So there in right hand side, you will be able to see the option of notes, right? In right hand side, you will be able to see the option of notes. So here there will be video option. Here in left hand side, you will be able to see the video. So whatever discussion we have done, that recorded video will be available in the LMS. And in right hand side, you will be able to see the notes, right? So what I will do here, I will show the structure to you. So you can see that from where you can get the notes. Let me show to you. Yeah, just hold on. I will show you the portal. Yeah, so you can see this is the LMS. Where you can see this is the LMS here, right? So now here, if you see the LMS is given to us, and here in LMS, what you have to do, you have to select the course, right? So this is the course which you will select. Now, once you will select the course here, right? So here you can see economics is given. So here you have to click on the economics. And yesterday, what we have done, we have discussed the first topic, right? That was the orientation and demand and supply, right? We have discussed about the basics of demand and supply. And once you will click here, so here you can see I have uploaded the content, right? So you will be getting the option to download this, right here. If you see, you will be getting the option to download this. So this option is not available to the faculties, but being a student, you will be getting an option to download this, right? So from here, what you can do, you can download the content, right? Or what I will do, apart from uploading the content here, I will also show the content through chat box. So at the end of the session, what I will be doing, I will be sharing the content through chat box. So you will be able to get the access of content immediately. So that question don't have intercept value and slope value. Acha, if question don't have intercept value, we will see. Let me uh, solve the question number one. We will solve the question, right? So quickly, what we will do, we will revise what we have covered in previous lecture. After that, we will solve the homework questions, right? And then we will discuss more concepts. So here in previous lecture, what we have done, we have discussed about in previous lecture, we have discussed about the microeconomics, right? We have discussed about the microeconomics, right? And also we have discussed about the macroeconomics, right? So we have seen that microeconomics focuses on individual management, right? It talks about the individual, that how the economy affect the individual or household, right? Or household or firms, right? So here we talk about the individuals, we talk about the households, right? How come various factors affect the household, right? How come various factors affect the demand and supply of funds? Then if I talk about the macroeconomics, so macroeconomics is a broad term where we talk about the GDP, right? We talk about the inflation, we talk about the interest rate cut, and etc. These are various factors what we do. We discuss under the macroeconomics. Right? There are various factors which we discuss under the macroeconomics. Right? This is what we have discussed. After that, what we have done, we have started the discussion about the demand function. Right? We have started the discussion about the demand function. And we have seen that there are various factors which affects the demand. Now, what are the factors which will affect the demand? So we have seen that the first factor which will affect the demand is price of product, right? Price of product. So we have taken the example of coffee. So here we can continue with the coffee example, right? Then we have also seen that there are other factors which will affect. So income, like we can say average income of India or any other country. Then we have seen the price of substitute goods. We have seen the price of substitute goods. Right? These are the factors which will be affecting the demand of coffee. Right? Absolutely correct. Substitute product, Arisher and Nishi has written. Then there are various other factors, right, which will affect the price. So we have seen that apart from this, the other factors like uh, government intervention, right? A lot of other factors are there which will affect the demand. Just hold on. Yeah. So you can see the future price of product, future price of product, right? These are the factors which will affect the demand of particular product, right? After that, we have seen that there will be an inverse relationship, right? There will be an inverse relationship between price and demand. Price and demand generally shows the inverse relationship. There can be exceptions, right? There can be exceptions, but this is the general rule which you have to remember. Exceptions we will discuss in detail in coming time, but this is the general rule, right? You have to remember that price and demand has inverse relationship, right? So here, this is how we draw the graph of demand, right? This is how what we do. We draw the graph of demand. So this x-axis stands for the quantity and y-axis stands for the price, right? Y-axis stands for the price. Now you have to understand that if you will reduce the price of product, right? You have to understand that if you will reduce the price of product, so the demand of that product will increase, right? So here we can take more examples, so you will be getting more clarity. If you kept the price of product, let's say $10, right? So here you are able to sell, let's say, quantity. Here I should shift. Yeah, here I should shift. Let's say if you kept the price of product that is $10 and you are able to sell only 100 units, right? You are able to sell only 100 units, right? Later on, when the price of product will decrease, right? I can give you the best example of mobile phones, right? I can give you the best example of mobile phones. Now, in economy, you can see that how does in last 1 decade the mobile sector or the telecommunication sector has boomed in India. Why? Because gradually, what companies they have done, they have reduced the internet charges, right? They have reduced the internet charges. Now everybody is the user of internet, right? If I take a decade back example, so there we used to pay 7 rupee for 1 minute call charges, right? If you remember, if you have used the mobile phone or any network one decade back. So we used to pay 7 rupee for 1 minute. Now gradually you can see there was fall in the price of uh, tariff and not tariff call charges, and all of a sudden there was increase in the users of mobile phone and telecommunication services. So in this case you have to understand when price will reduce, the consumption will increase. Now, this is the common law which we have discussed. Then we have also seen that if I want to create and function, right? If I want to draw and function, so what we do, we generally use the regression analysis, right? We use the regression analysis. So we have discussed about the uh, single factor, right? What we have done, we have discussed about the single factor, and we have also discussed about the multiple factor, right? So we have seen that what is the formula for single factor, right? The formula for single factor is going to be a, that is quantity demand, right, is equal to intercept, right? It can be plus minus. This will be decided by the formula, but usually we get the minus here, right? So here we take slope, right? We take your slope and we multiply this with the price. We multiply this with the price. Normally, what is the formula for regression analysis? The formula for regression analysis is y is equal to a plus bx, right? So a stands for the intercept, which we have discussed, right? So intercept is going to be the constant value. Intercept is going to be the constant value, right? And b is going to be the slope, which will change for every factor. So this is what we have discussed, right? Related to the single factor, and we have understood that how we can find out the demand, right? Yeah, absolutely correct, Parth. This is how we have understood that how we can find out the demand of product. I guess you're able to understand. After that, what we have done, we have also discussed about the multiple factor. So we have done the discussion about the multiple factor. Now here, what we do, we take into consideration the various factors which affect the demand. So price is the factor, which will affect the demand. Average income is the factor, right, which will affect the demand. So we have seen yesterday we have seen the example, right? Let's say you generally buy the local coffee, right? Right now you're not earning much, right? So what do? You prefer to buy local coffee, right? You prefer to buy local coffee, or you consume coffee in local stall. Right? There is a local stall which is available near to your office, and you consume coffee there, right? So this coffee wala sells you coffee at, let's say, 15 rupee, right? This coffee wala sells you coffee at 15 rupee, right? But you have to understand that once your income will increase, let's say currently you are earning 15,000 rupee in India, right? Once your income will reach to 50,000 rupee, so most of the time, what you will do, you will prefer to have coffee in Starbucks or CCD. So you have to understand when your income will increase, right? So rather than consuming the normal coffee, you will prefer to consume, 200 rupee coffee. This can be the scenario. This can be the scenario, right? So you have to understand that this is the factor which will affect the demand of coffee, right? This is the factor which will be affecting the demand of coffee. So local coffee consumption will reduce if the average income of individual increase. So you will find that the local coffee consumption will decrease. I guess you're able to understand. There are several examples, right? If your income will increase, the inferior goods consumption will generally decrease. Inferior good consumption will generally decrease. I guess you are able to understand what I'm trying to say. So here in this case, average income is the other factor, then price of substitute product, right? This will also affect the consumption of local coffee. So here in this case, what is going to be the formula? Here in this case, the formula is going to be y is equal to a. So intercept will remain same for all the factors, right? This will remain same. You have to understand this will remain same for all the factors. Then here we have to take b1 x1, so slope will change. We have to take b2 x2, slope will change. Here b3 x3, and again slope will change. So we have taken several examples, right? So in exam you have to remember one thing, that they won't ask you to calculate the intercept, right? It will be given in the question. They won't ask you to calculate the slope, right? It will be given in the question. So here these things will be given in the question, right? These things will be given in the question. So we have understood that how you can find out the slope. We also understood how you can calculate the intercept in our previous lectures, right? Apart from that, what we have done, we have discussed about the demand, right? We have discussed about the demand curve, if you remember. And in case of demand curve, we have seen several factors, right? We were not able to cover this entirely in previous lecture. So what I will do more discussion on demand curve. So you will be getting more clarity, right? That what is demand curve and what is elasticity. These concepts were remaining, right? So we will finish this, and after that, what I will do, I will take the homework question. So yesterday we have discussed, right, how do we draw the demand curve? So we have already discussed this thing today itself, that the price and quantity demand has inverse relationship, right? And this is how, what we do, we draw the graph. This is how the graph will be drawn. So you have to understand that if you will charge higher price, the quantity demand will be less. And if you will reduce the price, if you will start reducing the price, the quantity demand will increase, right? So here, let's say this is the price one. So this is going to be the Q1, right? This is the price two. So this is going to be the Q2. So you can see if the quantity curve is moving towards right hand side, right? Here you can see that quantity curve is moving towards right hand side. It means that there is increase in demand, there is increase in demand, right? So when you are reducing the price, right, the quantity demand is increasing here. So if it is P3 here, it is going to be Q3. If it is P4 here, it is going to be Q4. This is how demand curve is strong. After that, what we have done, we have started the discussion about elasticity. Okay, we have started the discussion about elasticity. Right. So under elasticity, we have discussed several concepts, right? So we have seen that what is the formula for elasticity? So if I quickly write down here the formula. So formula for elasticity, which we have discussed, where I can explain you, right? So we have discussed the formula for elasticity. I got very quick answer. Yeah. Recording also will be there, right? Recording also will be there, Vanshika. I will show you. I will show you. Recording also will be there, right? And if you're not able to get the access of recording, so kindly talk to your coordinator, right? So they will assist you. But I guess recording is there, right? But we will check it, no problem. We will check it, right? So in this case, what is going to be the formula? Formula is going to be here, the percentage change in quantity demand, right? Percentage change in quantity demand divided by divided by percentage change in price demand. Right. This is going to be the formula here. That is going to be percentage change in quantity demand and percentage change in price demand. What does it mean here? You have to understand that if the price of product is changed, right, you will find that all of a sudden the quantity demand will also change. Now we have seen various factors which will affect the quantity demand. Let's say I'm taking here the example of price. Right? Let's say I'm taking here the example of price. Now during festivals, we see that generally what companies do, they reduce their price. Now I won't calculate the percentage. I will take simple assumptions here. So let's say what Dell has done. Dell reduced Dell reduced the price of laptop they'll reduce the price of laptop by 10%, right? And quantity demand, quantity demand increased by, right? Quantity demand increased by, let's say, 15%, right? They were able to sell 15% additional laptops. Now, here in this case, if I want to calculate the elasticity, here in this case, if I want to calculate the elasticity, so how I will calculate the elasticity in this case? So I will use the same formula. So what is the percentage change in quantity demand? So percentage change in quantity demand is 15%, right? Whereas they have changed the price by 10%. You have to remember this formula, right? What you have to do, you have to remember this formula. So if the quantity demand is changing by 15%, your uh, sorry, if the price has been decreased by 10%, your quantity demand has increased by 15%. So here in this case, you will get the negative answer because the price has been reduced, right? Here in this case, you can see that the price has been reduced by 10%. So if price has been reduced by 10%, so we will write down here minus 10%. Okay, what we will be doing here in this case, we will be writing down here minus 10%, right? So here in this case, you can see what is going to be the elasticity? Elasticity is going to be a minus 1.5, right? This is the elasticity. Now, we have to understand that whether it is relatively elastic or not, right? Now, there is a concept of relatively elastic. There is a concept of relatively elastic, right? Now, what is the meaning of relatively elastic? Relatively elastic means that if percentage change in quantity is greater than percentage change in price. Right? Percentage change in quantity is greater than percentage change in price. It means the quantity change is very responsive to price. I can you are able to understand what I'm saying here, right? I can you are able to understand. So elasticity will also no. See, there could be a chance you will get the positive answer. We will discuss this, right? We will discuss this. No, no, no. Ratio, there could be a chance that your elasticity may be positive also. There are exceptions. We will discuss this, but generally it is going to be negative. We will discuss that point. So you have to understand when the percentage change in quantity is greater than percentage change in price. Or here I can write down that if the elasticity is greater than one, right? If the elasticity is greater than one, right? If the elasticity is greater than 1, greater than 1, or minus 1. Right. So we will call it as a relatively elastic. We will call it as a relatively elastic, right? Or we also call it as a sensitive. So what is the reason why we are calling it as a relatively elastic? Because you can see that if you're changing the price of product by 10%, right? If you're changing the price of product by 10%, you will find that there is all of a sudden increase in the uh, all of a sudden increase in the quantity demand. Now, if I take the example of let's say any luxury goods, right? You will find this situation in case of luxury goods, right? Generally, what companies do when companies they reduce the price of product, or it also depends on the income, right? It also depends on the income of the public. There are various factors, but you have to understand there are certain goods, right? What do we? I will come to this in elastic part also. Uh, just wait for some time. So we are going to discuss the homework you have assigned. So let me finish this. Just give me 5 minutes time. I will discuss the relatively stack. Then we will elasticity, relatively elasticity we have to discuss. Then we will solve the homework question because I can see many of you are interested in doing the homework question first. So I will start with the homework question. Then I will continue with this topic.
So,
Right? Yeah.
when elasticity is less than 1, which is also like elasticity is greater than minus 1, then it should be inelastic, right?
It is going to be inelastic. It is going to be
But
inelastic.
you wrote relatively elastic.
Come again. What are you saying?
But then you wrote relatively elastic.
It is greater than one. Na?
But you also wrote elasticity greater than 1 or minus 1. But if it is greater than minus 1, which will be negative, which will be less than 1, so it should be inelastic, right?
No, here, see what you have to remember. You have to remember, I will show you the content. Just wait. Yeah, here you can see you have to understand that when it is going to be relatively elastic, right? If it is going to be greater than 1, right? If it is going to be greater than 1. Now, what is the meaning of greater than 1? That it is responsive to the change. Now, I can take an example. Let's say you're asking, I will take the example of, let's say, price change. Right now, we have taken the example. If price is changing by 10%, if we are reducing the price by 10%, quantity demand increased by what percentage? It increased by 15%. Now, in most of the cases, if you will see that there is inverse relationship, right? There is inverse relationship. So here you will find that the answer is going to be negative, right? In most of the cases, you will find that the answer is going to be negative if I keep the price as the consideration, right? If I keep price as the consideration, so when the price will reduce, it is going to be there is all of a sudden increase in the quantity. And if it is greater than 1, here we can see if I compare the data, so quantity increase is 15%, whereas the price decrease is of 10%. So anyhow, you will get the minus answer, right? Anyhow, you will get the negative answer. So it is going to be relatively elastic. We do not use the term elastic. We use either relatively elastic or relatively inelastic, right? So when I'm talking about the
But sir,
elastic, so
how will we get
yeah, please say.
negative with? Oh, yeah, yeah, okay. Understand. I did not see the minus. Sorry.
No problem. If you're reducing the price now, so it is going to be negative. There is reduction in price. Let's say here you kept the previous price of product was $100, right? Now the new price is $90, right? You can see new price is $90. So you have reduced the price, right? So there is a change of how much? There is a change of $10. So here in this case, you can see it is going to be minus $10 divided by 100. So that is going to be minus 10%, right? So you will be getting here the negative answer. So if there is price increase, will it be positive? No, it is not going to be positive. In both the cases, you will be getting the negative answer. So if you will increase the price, right? If you will increase the price, right? So let's say here, you have increased the price of product. So quantity demand will decrease, right? You have to understand that the quantity demand will decrease. So I can take here the example, right? I can take here the example of any individual product where you will see that whenever company they increases the price, right? The quantity demand decreases. Now, if I take the example of, let's say, cigarettes, right? If I take the example of cigarettes here, right? Now, what is the intention of government, right? Government wants that they should be able to reduce the consumption of cigarette. In few states in India, what government has done, government has banned the cigarettes and alcohol. If I take the example of UPBR, I guess in UPBR they have banned the gutka, not cigarette. And in Gujarat, the alcohol is banned. Now, let's say what government wants to do. Government wants to reduce the consumption of cigarette. Right? Government wants that we want healthy India, right? And government wants to reduce the consumption of cigarette, right? Now, if government wants to reduce the consumption of cigarette, so here what government will do, government will try to keep the upper slab for the price of cigarette, right? So let's say currently there is a company who sells packet of cigarette at 200 rupees, right? Now, government has intentionally kept the ceiling on government has kept the ceiling of 300 rupees. That every cigarette company, what they have to do, they have to sell the cigarettes at 300 rupees. So here, what government will do, how government will increase the price? Government will increase the taxes, right? Government will increase the taxes, and if the taxes will increase, so automatically the price will increase. Now here, you have to understand the person who used to consume 10 cigarettes previously, right? He used to pay 200 rupees. Now, for 10 cigarettes, he has to pay how much? He has to pay 300 rupees. So it will become costlier. So here in this case, you have to understand the consumption of cigarette will reduce. I cannot afford 300 rupee cigarette. So what I will do, I will consume 6 cigarette, right? I will consume 6 cigarette, and here I will try to pay only 200 rupee for 6 cigarettes. So you have to understand that if you will increase the price. So when the price of cigarette was 200 rupee, right? At that time, the one stall was able to sell, let's say, 500 cigarettes on daily basis, right? Now, if the price has increased there, if the price brought to 300 rupee, right? So here in this case, you have to understand that the consumption will decrease. So here now, that vendor will be able to sell only 400 cigarettes, right? So here you have to understand that the quantity consumption is decreasing. So this will be negative now, right? You have to understand this will be negative here in this case. right? So this is the scenario. This is going to be negative here in this case. So what is the percentage change here? What is the percentage change here in this case? So percentage change is going to be here. So you can see if I calculate the percentage change in quantity. So the difference is of 400 minus 500, that is going to be 100, right? So here we can take 100 and the old consumption quantity was 500. So I will divide this with the 500. So here in this case, you can see it is going to be minus 20% because the consumption has reduced, right? So consumption has reduced by 20%. By what percentage the price has increased? The price has increased. We can see the old price was 200. Now the new price is 300 here, right? So if you see the price has increased by 100 rupee and the old price was 200. So there is increase of here 50%, right? There is increase of here 50%. So any case, you will get the negative answer. But there are other factors. We will discuss the other factors where you can get the positive answer also, right? Where the elasticity is going to be
Sir,
positive. Yeah.
why is it 200? It should be 400, right? 100 divided by 400.
This is about the price. This is about the price. So the old price was 200, right? I'm talking about the price here. So this calculation is for the change in price. I guess you're able to
Yeah,
understand. The
understood.
old price was 200
Yeah.
and the government has kept the ceiling on cigarette. That is, every vendor, every manufacturer has to sell these cigarettes at 300 rupees. So you can see that the price increase is of 50%, right? So if government has increased the price by 50%, but still it is a addictive good, right? It is not easy to get rid of cigarette consumption. So you can see consumption has only reduced by 20%, whereas the price has increased by 50%. So if I calculate here the elasticity, so here you can see the elasticity. It is going to be quantity changes of 20% minus 20%, and here this is 50%. So it is going to be 0.60 minus 0.60. So here in this case, it is relatively inelastic. So first we calculate the elasticity, and once we get the number, then we decide whether it is relatively elastic, relatively inelastic. So here it is less than 1, right? Here it is less than 1. So we will call it as a relatively inelastic, right? So people are very rigid, right? They are less sensitive of the price. In simple language, if I say that why it is relatively inelastic, here people they are very rigid, right? You can see that the price has been increased by 50%, but still the quantity consumption has reduced by 20%, right? So it clearly shows that people they do not want to leave cigarettes, right? So the quantity consumption is comparatively inelastic as compared to the change in price, right? It is less sensitive. Am I making sense here? So I guess you're able to understand what I said. So we have discussed about the relatively elastic, inelastic. I will show you the graph also, but I should first solve the previous question because many of you have written the uh, in chat box that we should solve the homework question. You can see the homework questions here. So question number 3 was the homework question, if I'm not wrong. This was the homework question. So what this question has asked us to calculate, a consumer demand for product increases from 200 to 240 units when their income rises from 5,000 to 6,000, right? Then the income elasticity of demand and determine whether goods is to necessity, luxury and inferior. So this I have to discuss, right? This I have to discuss, but still, this is the core concept which I will be discussing when we will cover the income elasticity. But still, it has been asked, so I can discuss this, so you will be getting more clarity, right? So what I will do, I will calculate elasticity here. We will calculate the elasticity, whether it is a necessity, luxury, or inferior goods. This discussion we will do today, but later on, there's a specific concept which we have to cover. So this discussion I will do later on, right? But I will teach you how you can calculate elasticity. So you can see consumer demand for product increases. Now here in this case, you can see that the demand for product has increases. So can I draw a table, right? And today we will solve somewhere around 20 MCQs, right? At the end of the session, we will solve 20 MCQs. So you will be getting the idea that how you have to attempt the MCQs, and the MCQs are in same pattern. So here we can see the old, new, and difference in the values, right? So here we can see the quantity demand has increased. So previously it was 200, now it is 240. right? So there is increase in the quantity demand. Uh, Income rises, right? So this is the another factor which has been considered. It is not price, they have taken your income. So if your income is increasing, right? So your consumption of goods has also increased here. So we can find out the change. So here, the quantity demand has increased by 40, whereas the income has increased by $1,000, right? Whereas the income has increased by $1,000. So here in this case, we can calculate the percentage change in quantity. So if I want to calculate the percentage change in quantity, so what I will be doing here, I will take the change and I will divide this with the old value. So here it is going to be 40 divided by 200, and here it is going to be, if I want to calculate the percentage change in income, so here you will see that we will get the positive answer, right? So we were talking about the same thing that we can get the positive also. So here in this case, you can see that if I divide 1000 with 5000, so here it is going to be how much? 40 divided by 200 if I do. So that is going to be 20%, right? And your income has increased by what percentage? Income has also increased by 20%, right? So here you will get the answer that is going to be 1. So if I want to calculate the elasticity here, so it is going to be 20% divided by 20%. I guess this was the question, right? So here it is going to be 1. Is it clear, guys? Hmm. Yeah, that can be correct for Adi. Yeah. Yeah. So I guess you understood what we have discussed till now, right? So what I will do, I will continue. I guess this was the only homework question, and I asked you to read example number 1 and 2, right? So we should continue and we should discuss more concepts, right? So you will be getting more clarity. So we have discussed about the relatively elastic, and here we can take the example of some goods, right? Let's say necessity goods or branded goods, right? So in case of branded goods, you will find whenever companies, if I take the example of clothing showroom, whenever clothing showroom gives you the discount, so all of a sudden you will find that the demand increases more than the price. Then we have taken a second example where we have discussed about the cigarette, where we have discussed about the cigarette consumption, right? So we have seen that the price was increased, right? Price of cigarette was increased by 50%, right? Price of cigarette was increased by 50%, and the quantity demand we have seen that got decreased by 20%, right? That got decreased by 20%. So this is going to be negative here, right? This is going to be negative here. So if you want to calculate the elasticity here, right? If you want to calculate the elasticity in this case, so what you will be doing here in this case, you will take percentage change in demand, right? So there is change in demand of 20%, which we have already calculated. So it is 20% divided by 50%, right? It is 50% divided by 20% divided by 50%. It is going to be minus 0.6. Now here, this is going to be inelastic, right? It is going to be relatively inelastic. It is less than 1, right? It is less than 1. It means that the quantity demand is comparatively less sensitive to the change in price, right? It is comparatively less sensitive to the change in price. Now here in this case, you have to understand that what lot of companies do, they play with the price. If let's say the product is insensitive, right? The product or the quantity demand is insensitive. Don't you think the company who deal with similar kind of products, they play with the prices? If I take the example of, let's say petrol, like nowadays, situation is
Sir,
comparatively bad. But if I take, please say,
hello, sir.
yeah, please say, please say.
Sir, I have a doubt. Sir, you have said that this is relatively inelastic, this
Hmm.
cigarette one, but
Hmm.
relatively inelastic is less than -1, right?
It is it is minus 0.6.
But, sir, less than -1, it will be -2, right?
No, 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 no. See, that is a different thing. If it is less than 1, that's why I'm not using minus here. You have to remember one thing. If it is less than 1, right? You just ignore the minus and plus signs here, right? You just ignore the minus and plus sign. You will get confused here, right? So what you do, you assume that it is only 1, not minus 1. And if it is only 1, so zero point 0.6 is going to be less than 1. Right? That's why what generally we do, we ignore the minus 1. But here we are doing the entire calculation. That's why I'm writing down minus here. If it is going to be less than 1, that is going to be 0 0.6. So it is going to be inelastic.
Sir, can you go through? Can you just go through the relatively elastic and relatively inelastic one? Was
Well,
confusing.
you are talking about?
Relatively elastic and relatively inelastic one, because I'm getting little confused there.
Okay. Wait, I will show you the formulas again. I should paste these formulas here. So here you can see that what is going to be relatively elastic, right? Relatively elastic means that if the value is greater than 1, right? If the value is greater than 1. Am I making sense here? Now, if you see here, the formula for relatively inelastic is given, right? Inelastic means that it is not responding to the change with price. That is going to be relatively inelastic. Let me show you some examples. Just hold on.
Sir, can't we just consider it as an absolute value? For example, if we are getting -2, then since it is greater than 1, 2, so it will be considered as
Absolutely.
relatively
Yeah,
elastic.
same thing we are discussing here. Or else, you can read that if the percentage change is comparatively less, if the percentage change is comparatively less, so you can consider it as a inelastic, right? You just think that if the price of product is changing by 50%, but quantity demand is changing by only 20%. So percentage change is lesser than the price change, right? Quantity change is lesser than the price change. So in that case, what you will do, you will consider it as the inelastic. It is less sensitive, right? This is how you have to read. Sometimes we get confused with the formula, right? But if you will read like this now, so you will be getting more clarity. So, or either you can ignore the minus 1, right, from the formula, minus sign from the formula, so you will be getting here more clarity, right? So here I can show you the example. Just let me open it. Yeah, here I will show you the example from Google. So let's see this example, right? Let's see this example. So you will be getting more clarity. Here they have ignored the minus sign. You can also ignore the minus sign, right? So why I have taken the minus sign, because when you will read the content or material, so they will use the minus sign, right? That's why I have used it. Otherwise, you can ignore it. That's okay. You have to understand the concept. So here you can see understanding the inelastic demand. So let's read it. Inelastic means that 1% change in the price of good or service has less than 1% change in the quantity demand. Now we have seen that the price of cigarette was increased by 50%, right? The price of cigarette was increased by 50%. And here the quantity demand of cigarette decreased by 20%. So why it is inelastic? Let's say you consume cigarette, right? You consume cigarette. Now, what government has done here, previously you used to buy cigarette at 200 rupees, right? Here, now government has increased the price of cigarette by 100 rupees. But still what you're doing, you're consuming 10 cigarettes, right? Still, it is an addictive good, right? So still what you're doing, you're ready to pay 100 rupee more. You have decided that now, instead of going by car, you will go to your office by bike. You will save, your petrol cost, and you will spend that cost towards the consumption of cigarette. So don't you feel that you are not sensitive about the price, right? You're saying, "Bhad mein jaye, I will consume 10 cigarettes." So it clearly shows that you are not sensitive about the price. You will consume 10 cigarettes on daily basis. Right? If I take the example of Shah Rukh Khan, do you think that Shah Rukh Khan will care about the price? So he's not sensitive about the price at all. Right? He will consume 60 cigarettes every day. So that is what an inelastic demand. So in this case, if the price of cigarette has been increased by 50%, right? The quantity change is less than 1%. Quantity change is less than 1%. Or here, if I calculate the number again, so quantity change is of 20%. And if I divide this with 50%, right? So here you will get the answer that is going to be 0.4. So it clearly shows that if you're changing the price by 1 rupee, if cigarette price is increased by 1 rupee, the consumption of cigarette has decreased by zero point 0.4 units, right? So comparatively, it is less than the change in price. If you have increased the price of cigarette by 1 rupee, the consumption has reduced by only zero point 0.4 units. So it clearly shows that it is comparatively less sensitive, right? It is comparatively less sensitive. We can read more, so you will be getting more clarity here. So let's see. For example, if the price of essential medication changed from 200 to $200, $202, a 1% increase and demand changed from 1,000 units to 995, a less than 1% decrease, medication would consider as an inelastic. Now, in case of medicines, if you will see, so medicine companies, they are having superpower, right? That's why pharmaceutical companies, they are considered as the price dominating sector. Why? Because they know that even though if they will increase the price of medicine slightly, still consumer will buy the medicine. Like, so you have to understand here what they are saying, that the price of essential medication changed from 200 to $202. So it is clearly visible they have increased the price by 1%. Right? They have increased the price by 1%. The consumption has reduced by what percentage? If you will calculate the difference, so the consumption reduced by 5 units, it means it has reduced by 0.5 percentage. So you can see they have increased the price by 1%. The consumption has only reduced by 0.5%. So it clearly shows us that the product is insensitive, right? Product is insensitive, or we can say inelastic. So what you have to do, you have to remember one thing, that when you will solve the question, when you will try to analyze whether it is elastic or inelastic, kindly ignore the minus one. It is the part of syllabus. That's why, I'm considering the negative sign. But when you will do the analysis, you just focus on the price rather than focusing on the formula. You just focus on the price, right? So you will be able to get the clear understanding and you won't get confused. Am I making sense
So,
here?
so sir, if the quantity demanded is less than the change in quantity demanded is less than the change in price, then it is relatively inelastic. And when the change in quantity demanded is more than the change in price, it is relatively elastic, right?
Perfect, perfect, perfect. You have to focus on the price only, right? Even though if you will
Okay.
see the theory which I have given, the same thing I have mentioned there, right? So I guess you understood. Now
Yeah,
I would
yeah.
like to discuss.
Thank you, sir.
Yeah, great. So what we have done till now, we have discussed about the relatively elastic.
Excuse me, sir.
Yeah, yeah, please say.
Sir, can we, rather than looking at the minus one and zero, or I mean the plus one and zero, can we rather look at percentage change in quantity and percentage change in
Absolutely, the
price?
same thing you have to do. The same thing you have to do, right? You have to focus on the percentage change in price and percentage change in quantity. That is the best way to analyze.
Okay,
Yeah.
thank you, sir.
But in exam, sometimes they ask you the calculation, they gives you the number that the elasticity is 0.6. So in that case, you should be able to analyze that if it is 0.6, it is less than 1, so it is going to be inelastic. This is the simple law. If it is less than 1, it is inelastic. If it is greater than 1, it is elastic.
Okay, sir. Got it.
Yeah. So if I talk about the relatively inelastic, so we have discussed inelastic. So elastic means that if the uh, elasticity is greater than 1. Elasticity is greater than 1. If the elasticity is less than 1, right, I will ignore minus 1. You just assume it as a 1. It is going to be inelastic, right? Now, there is another concept that is perfectly, perfectly elastic. Perfectly elastic. Now, what is the meaning of perfectly elastic? Yeah. What I will do here, I will show you the concept of perfectly elastic. This we have started, but we were not able to finish it, right? So first, I will show you the theory related to the perfectly elastic, so you will be getting more clarity. This entire content is given here, right? So you can read it from the study material. I have written everything, so it will be easy for you to understand. So we can understand what is perfectly elastic. So you will be getting more clarity. Now, here in this case, you have to understand that when it is going to be perfectly elastic, right? So you have to understand that this is the scenario where the demand is going to be perfectly elastic. Now, what is the meaning of perfectly elastic demand? I can take the example and then we can proceed ahead, right? So third point is that is perfectly elastic. Perfectly elastic. Now, perfectly elastic means here that the price of product, this is how we can draw the graph of perfectly elastic. Right. Perfectly elastic means that the quantity demand will change. Right. Quantity demand will change at the same price. Right. At the same price, you will find that the quantity demand will remain constant. Right. The price will same and there will be shift in the consumption. Now, here we can take several examples, so you will be getting more clarity. Now, I can take the example here. Acha, there is one concept that is the market structure concept, which is known as perfect competition. We have to discuss about the market structure, but here I would like to give you the little bit idea about the perfect competition. Now, what is the meaning of perfect competition means, guys? Perfect competition, I guess you might have heard about the monopoly, you might have heard about the monopolistic market, right? So there is another kind of market that is known as perfect competitive market, right? That is known as competitive market or perfect competitive market, right? Now, what is the meaning of competitive market? Competitive market means that where there are lot of vendors and buyers are available, right? Where there are lot of suppliers, suppliers and buyers are available, right? Where a lot of suppliers and buyers are available. Now, I can take the example of, let's say, grocery shop, right? I can take the example of grocery shop, right? Now, in case of grocery shop, you will find that what they do, they sell the products which is manufactured by the manufacturer, and grocery shop sell these products. So it means they sell the ready-made products, right? So let's say you are the owner of this grocery shop and you buy the cookies of Britannia, right? What do? You buy the cookies of Britannia, right? Britannia cookies. Now, this manufacturer supplies the cookies to the various vendors, right? This manufacturer supplies the cookies to the various vendors. Now, you have to understand the MRP on cookie is given, that is $10. Right. Now, logically, the vendor should sell this cookie at what price? $10. This vendor should sell the cookie at $10 and $10. But you have to understand that if this vendor will start charging more than the MRP, right? There are vendors who charge a little bit more than the MRP. So let's say he's charging $10.2. Now, in case of Coke, in case of soft drink, you know what? They say they charge extra amount and they say we are charging cooling charges, right? They are charging cooling charges. Instead of biscuit, you can assume it as a soft drink. Now, there is a vendor who is saying that I pay the bill of refrigerator, so I charge cooling charges. The MRP of soft drink is, let's say, $15, but he's charging extra dollar for the cooling charges. But logically, it should be sold at MRP. So you have to understand if this vendor will charge extra, what you will do instead of buying the product from this vendor, you will go and buy the product from another vendor, right? So let's say if I take the example of vendor A, right? If I take the example of vendor A. Now, if vendor A does not increase the price, right? Currently, what he do at $10, he sell the product at $10 and he is able to sell 1,000 units on daily basis. He is able to sell 1,000 units on daily basis. But there is vendor B, right? There is vendor B who's little over smart. And what he has done, he has started charging extra price. He has started charging cooling charges for the soft drink. Now, here in this case, previously he was able to sell 1,000 units, but now the customers they have stopped going to his shop and his sale reduced by 500, right? His sale decreased by 500 units. So here, if his sale will reduce by 500 units, so the sale of this vendor will increase, right? Obviously, the customer will prefer to buy the product from vendor A because he's selling the product at comparatively less price or at MRP. So his sale will increase by 500 units. So you can see he has kept the constant price, that is $10. So at $10 previously, he was able to sell only 1,000 units, right? He was able to sell 1,000 units. But just because vendor B has increased the price, right? What vendor B has done, vendor B has increased the price, and you can see that here his consumption increased, right? You can see that his consumption increased. I guess I'm making sense here, right? I guess I'm making sense here. I can give you the another best example. I can take the example of, let's say, Kumbh Mela. I guess you might be knowing about the Kumbh Mela. So last month, in various places, a lot of people they went for the snan, right? For Kumbh Snan or Kumbh Bath. So the vendors who were having their shops nearby the Kumbh Mela or river, right? So what they have done, there was all of a sudden increase in the quantity demand, right? People, around 40 crore people, they went there, right? Around 40, 50 crore people, they went for the snan. So you can see that the person who is having the shop near to the river, so obviously the demand of the product of that vendor will increase. So they kept the same price, right? They kept the same price, but there was quantity demand increased all of a sudden, right? So this is the example of perfectly elastic. There is no change in the price, but the quantity demand will increase or decrease, right? That is the example of perfectly elastic. Now, why it is the example of perfectly elastic? Here you have to understand that you're not changing the price, right? So here, if I draw the proper example, so you will be getting more clarity. So let's say we will write down the old price, new price, and then we can further see. So the old, new, and change is given here, right? So you can see the price change is zero. It was $10 and it was $10, right? So here in this case, you can see the price change is zero, right? If I talk about the quantity change, so quantity changed by 1,500, right? So here there is change of 500. So here in this case, you can see that there is increase of 50% in the quantity, but there is zero change in the price. There is zero change in the price. So here in this case, you won't be getting the any answer. Why? Because if I calculate the elasticity, right? If I calculate here the elasticity, so you will be getting zero answer. Why you will be getting zero answer? Because we take the percentage change in quantity, which is 50%, right? Usually you will get the error. You won't get any answer. So we cannot divide any number with zero. So that's why here you have to understand logically you will get zero here. It should not be zero. But anyways, here in this case, it will be considered as a perfectly elastic. So here you can see the formula. So when it is going to be perfectly elastic, if the elasticity in demand is zero, it means you are not changing the price and your quantity demand is changing, right? Your quantity demand is changing. I guess you're able to understand. Huh, nah, absolutely correct. Absolutely
So,
correct. Yeah.
so is
Please,
it
please.
like safe to say if we, in a layman language, we say that elasticity is actually the impact that is on the quantity consumption. So,
Absolutely.
right, like
Absolutely.
if there is a increase in the quantity when the other factor is changing, then it is elastic. If it is there's no increase, then it is inelastic in the quantity. Like, and is it like making sense? Like, so I just want to say that elasticity is used with reference to the quantity consumption, right?
Absolutely, absolutely. It is used
Oh,
for the quantity consumption. It is here. I have selected the wrong data. This is the graph for perfectly elastic, right? This is sorry. Here I have selected the first one. So if you will divide the 50% with 0%, so you won't get any answer. The same thing I was saying that you cannot divide any number with the zero. You won't get any answer, right? So here this is going to be infinite. So usually in Excel, when you will divide the 50 with zero, or if you will divide any value with zero, you will get the error, right? You will get the error. So here, if it is elastic, so it is going to be infinite. Here the sign is going to be infinite. Right. So usually, if I take the example of seasonal business, right? If I take the example of seasonal business, if I take let's say the best example is marriage season, right? In India, generally, if you will see that maximum marriages, it take place in the month of October, November, and or in the month of April or May. So at that time, you will find that all of a sudden the consumption of vegetable, the consumption of milk, the consumption of paneer get increased, right? So that can be the example of perfectly elastic, right? That can be the example of perfectly elastic, and we can see the various industry-based examples. So you will be getting clarity. See, Parth, why we are using this sign here, you have to understand that there is no control on quantity demand. In case of perfectly elastic, we assume that there will be no control on quantity demand, right? So here you have to remember that if one vendor will increase the price, so the customer they won't prefer to go to the shop of vendor B, right? They will come to you, right? They will come to you and they will buy the product from you. So you have to understand that here in this scenario, the quantity demand can change up to any extent. That's why what we do here, we use the infinite. Right? We use here the infinite sign. Now here what I've done, I have brought some good example for you, right? So you will be getting more clarity. I have brought the practical example. So let's see what can be the practical example of inelastic demand, right? What can be the practical example of inelastic demand? So, sorry, this is inelastic. We have to see the elastic. Yeah, so you can see the real world example of perfectly elastic demand is, uh, first we will read perfectly elastic demand means the consumer will buy unlimited quantity of product at a specific price, but the demand drops to zero if the price increases even slightly. So you have to understand that if you will increase or decrease the price, right? So demand will definitely change. But if you're keeping the price same, if you're keeping the price same, and when the demand of product is changing, right? When the demand of product is changing, we will call it as a perfectly elastic. The demand curve is horizontal line because this we have already discussed. We can see the scenario here. So a farmer sells wheat in a perfectly competitive market. So what is the meaning of perfectly competitive market? Perfectly competitive market means that where where there are a lot of buyers and sellers are available, right? Where there are a lot of buyers and sellers are available. We have to discuss this in detail. Right now, I'm just giving you the idea where a lot of buyers and sellers are available, right? And what they do, they sell homogeneous product or they sell similar products, right? They sell similar products. So I have taken the example of Britannia. So when Britannia manufactures the biscuits, right? When Britannia manufactures the biscuit, so they supply these biscuits to the various suppliers. So this is going to be the similar product or homogeneous product, right? So here in this case, you have to understand that substitute vendor will be available. If you are charging extra, what customer will do? Customer will knock the door of other vendor. So you can see where the seller offer the same product. The market price of wheat is $5 per kilogram. A farmer raises the price. So let's say this is farmer A. Farmer A raises the price to $5.01. Buyer will switch to other farmer selling at $5, right? So there are two farmers or three farmers. So you have to understand that if farmer A will raise the price, right, he will start charging the extra amount. So what customer will do? Customer will go to the shop of farmer B, right, and customer will buy the product from farmer B instead of farmer A, right? So you can see that how come the quantity demand of farmer B will increase significantly, right? Then you can see farmer lowers the price, they still earn same revenue since the demand is already high at $5 per kg, right? So I guess you're able to understand what we have discussed. So this is how we can define the perfectly elastic demand. Now, if I jump to the next discussion here. So now we have to discuss about the inelastic demand, right? What is the meaning of inelastic demand here? Inelastic demand means that even though if you're increasing or decreasing the price, right? Even though if you're increasing or decreasing the price, it won't affect the quantity demand, right? It won't affect the quantity demand. So if I talk about the perfectly inelastic, perfectly perfectly inelastic demand.
Sir, excuse me. In the
Yeah.
last example which you have given, when the farmer lowers the price, why they won't earn more? I want to know that point.
Why they won't?
I mean, if the farmers lower the price, they still earn the same revenue. What is that logic behind that?
Acha, here, if you see the market price of product is how much? The market price of product is $5, right? So
Correct. Yeah.
market price of wheat is given here, right? $5. Now here, see, usually if I take the example of a farmer will reduce the price, the quantity demand will change here. Right? You have to
Correct.
understand for sure quantity demand will change. But you have to understand the real scenario. So there are few vendors who can do this thing, right? So if I take the example of let's say grocery shop again, right? So in your local area, you will find that there are various grocery shops, right? There are various grocery shops A, B, and C. So generally they sell their product at what price? They will sell their product at market price only, right? But if I take the example of let's say DMart, now DMart is a big vendor, right? DMart is a big vendor. Right. So here in this case, what they are able to do, they are able to buy the product directly from the manufacturer. So they are able to reduce the intermediary cost. Right. So here in this case, they are able to lower their product cost. Now there are a set of customers, right, who prefer to do shopping on Sunday, right? Who prefer to do shopping on Sunday. So they go to the DMart, but you have to understand that DMart does not provide you any kind of credit, right? DMart does not provide you any kind of credit. So here in this case, you will get the discount for sure. So let's say there is a biscuit whose MRP is $10, right? So DMart will sell you that biscuit at $9. They will give you the discount. But in this scenario, what you have to do, you have to make the immediate payment. Right? In this scenario, what you have to do, you have to make the immediate payment. So there are exceptions, right? There are exceptions where we provide the discount and you buy the quantity in bulk. But if I talk about the maximum grocery shop, which is located to nearby your area, you just try to imagine. So they won't be selling you the product at discount because they have to bear the intermediary cost. So how they are still able to compete with the big giant like Dmart? What they do, they provide credit to their customer, right? They provide credit to their customer. So they have their set of customers, right? They have their set of customer who cannot pay the amount immediately. So what they do, they sell their product at MRP, right? They sell their product at MRP and they receive the same amount of revenue, but they provide the credit. So here you have to understand that there are two scenarios. One, they are talking about the demand. So if demand will reduce the price, you have to understand people will go and buy. But here generally they won't reduce the price, right? Generally they won't reduce the price. Yeah, sometimes what they do, they give you the discount. Like sometimes these grocery shops, they give you the discount, right? So let's say if you're buying the product of $1,000, so if you will request them, they will give you let's say discount of $10 or $20, right? But that discount won't affect their demand much. So this is what it is mentioned in the third point. You can read it again, so you will get more clarity. Is it clear? So this point is saying that people are ready to pay for the MRP.
Yeah.
So MRP is $5. It means people they are ready to pay $5. So even though if you will go to your local kirana shop or grocery shop, even though if he's saying no, bhaiya, I won't be able to provide you the discount, still you will buy the goods from him because you can understand because MRP is given $5, so you won't much bargain for the discount.
Discount. Yeah.
Yeah. So this is the scenario. So do not, connect this with the DMart because yeah, DMart is a totally different segment and that is the different market. So we will discuss about that market also, right? So we'll be getting more clarity. So right now we are discussing about the perfectly competitive market.
Perfect.
Yeah. So here you have to keep in mind that we are discussing the market where a lot of suppliers and buyers are there. Right.
Mm-hmm.
So if I take the example, nowadays the competitor of DMart also came into the market, but it is not the part of perfect competitive market.
Yeah.
So I guess you understood.
Yeah. Yeah. Thank you.
So now we have to discuss about the perfectly inelastic demand. Now, what is the meaning of perfectly inelastic demand? A perfectly inelastic demand means that here, even though if you will change the price, in case of elastic demand, right, we have seen the graph. So graph was like this, right here. We have drawn an horizontal line, right? In case of elastic demand, here what we have done, we have drawn an horizontal line. Right here we have drawn an horizontal line. So in this case, the quantity will fluctuate. Right here in this case, we have seen that the quantity will fluctuate, but the price will remain same. Right here, the price will remain same. So the price is $5, so it is going to be remain same. But in case of inelastic demand, you have to understand, right? In case of inelastic demand means that the quantity will remain same, right? The demand will remain same. You can change the price, whatever you want to do, right? So here what you can do, you can increase or decrease the price. So let's say the uh, previous price of product was $10. Now the company has increased the price and the price is $11. Now again, what company has done? Company has increased the price, it is $12. Then again, what company has done? Company has increased the price $13. So best example I can take here, and if you pay the fees of your, children or son, so you might be able to remember this thing that now the education cost in India or everywhere, I guess it is very costly. Right? Education cost is increasing day by day. Right? And still, whatever fees is charged by the schools or colleges, we pay for it because we know education is very important, right? So here you can see education cost is increasing. Here we can see the medical cost is also increasing day by day, right? The medical is becoming costlier and costlier. So you have to understand, if I take the example of, let's say, medicine, right? Or if I take the example of any individual, let's say the person is having blood pressure, right? If somebody is having blood pressure, he has to consume He has to consume tablet on daily basis. You cannot survive if you're having blood pressure and you're not consuming tablet, right? So tablet is the necessity now, right? If you won't take the blood pressure tablet, right, it will become a deadly situation for you. Even though if you miss the single dose of blood pressure tablet, it will be a deadly situation. So you have to understand that if doctor has prescribed you, let's say, two tablets on daily basis, you have to consume two tablets on daily basis. So if the price is $10, still you will pay the $10. If the pharma company increases the price, right, still what you will do, you will buy the same product at $12, right? You will buy the same product at $12 even. So you have to understand that here in this case, the price will change, but the quantity demand won't change, right? Quantity demand won't change. Yeah, I can see a few questions here. Let me read the questions. Vanshika ji is asking that Adhishwar has written in case of life saving drugs. So, sir, if the price is constant and the change in demand, so they will get any profit. I mean, the price saying they are selling the product at market price, so they still get any profit. They will get the profit now. So, see what manufacturer will do. Manufacturer will supply the product after keeping the retailer margin, right? So, let's say manufacturer will supply the product at $4. Now the trader or retailer has to sell the product at $5. So anyhow, he will be making the profit. They will make the profit. Their profit portion is $1. So if they are selling 1,000 units, they will make the profit of $1,000, right? Yeah. So I guess you understood this case. What is the inelastic demand? Inelastic demand means that you can change the price by whatever amount, but the quantity demand will remain same, right? The quantity demand will remain same. This is the example of inelastic demand, right? So here your price will change. Here you can see your price will change. So let's say that there was a drug which was available at $10 previously, right? There was a drug which was available at $10 previously. Now they have increased the price, but the quantity demand remains same here. So I will draw the box and we can see. This is the old price, new price, and then we can see here the change. Right now, what government has done, government has changed the price. So old price was $10, right? New price is here $12. So price changes of $2. Now, if I talk about the quantity, right? So quantity is given here. That is, let's say company was able to sell 1,000 units. Still, they are able to sell here 1,000 units. So it is going to be zero. So there is a price change of 20% and quantity changes of here only zero, right? 0%. So here, if I apply the formula, so it is going to be 0%. So we take the formula to calculate elasticity. It is going to be change in quantity percentage divided by change in price percentage. So if you will divide anything, if anything will be divided, if zero will be divided by any value, it is going to be zero, right? So here in this case, what is going to be elasticity? It is going to be zero, right? So the perfect inelastic formula is going to be ED is equal to zero. I guess you are able to understand. So you can see here the real life example. I will give you 1 minute time, right? You just read it and then we will continue. Just read it. I'm giving you 1 minute time. We can continue. So basically, you mean if there is no change in price, then it is perfectly elastic. And if there is any change in the price, it is correct. It is correct. Change in demand, perfectly elastic. No. If there is no change in demand, then it is going to be Acha, you have corrected yourself. Yeah, absolutely. Yeah, absolutely. Absolutely. Chalo. So now we can proceed ahead. So I guess you understood, right? You understood the concept of elasticity, inelasticity, perfectly relatively. So can we proceed towards the next concept discussion? We have to do more discussion about the demand curve, right? So you will be getting detailed idea. So shall we proceed? Is there any question would you like to ask from the calculations which you have made till now? Yeah, thank you. Thank you, Parth. Thank you, Purvadi, for responding. So, what we have done, we have understood that what is elasticity, right? So, we have taken a lot of cases also. And if you will read this PPT, so in this PPT, you will get a lot of cases, real world example, right? So, I will suggest you to go and read the PPT, right? Now, what we have to do, we have to continue with the demand curve. There are a few more concepts which we have to learn in case of demand curve, right? So you will be getting more clarity. So we have discussed about the elasticity, right? So in case of elastic demand curve, this curve is going to be the upward moving curve, right? This is going to be the upward moving curve. And here, in case of inelastic, it is going to be downward moving curve. This we have already discussed in detail. Now, what we have to do, we have to discuss the another concept that is the shift of demand curve, right? This is the another concept which we have to discuss in detail that is shift of demand curve. When the demand curve will shift, right? When the demand curve will shift. Now, here I can take the example, right? Listen to me very carefully. This is an important concept, right? So once you will understand this, so you will be getting more and more clarity. And these curves will play a very crucial role in coming time because with the help of these curves, we will be able to understand various concepts. So shift of demand curve. This is the another concept which we have to discuss. Ha. Change in demand due to the other factors than price. That is quite correct. Shift of demand curve, we can see. What is shift of demand curve? Right. Now, what we have done here that we have seen that if the price changes, if price changes, the quantity demand will also change. And we have seen that if we change the price, right? So this is how the quantity demand changes. This is how the quantity demand changes. But there are several situations where the entire demand curve will shift. Right? There are certain cases where the entire demand curve will shift. So let's say I am drawing an example here, so you will be getting more clarity. So here, let's say this is the curve which we have drawn. Right, let's say this is the curve which we are drawing here. This is the curve here we are drawing. Now, if the entire curve shifts towards right hand side, right? If let's say the entire curve shifts towards the right hand side. Now, what can be the scenario here? Let's say currently what we are doing, we are selling an product at $10. Right? Currently what we are doing, we are selling an product at $10. And at $10, we are able to sell how many units? We are able to sell here, let's say 1,000 units. Right? If we are selling the product at $12, so we are able to sell here, let's say currently we are able to sell here 1,250 units, right? But what if this curve shift towards right hand side? Here, there is shift in the curve. Now, what this shift tells us, right? What does this shift tells us? Now, here in this case, at $10 price, you will be able to sell additional units, right? Let's say at $10 price now, you are able to sell how many units? You are able to sell 1,250 units, right? Here, you are able to sell 1,250 units. So you can see this curve has shifted towards right hand side, right? Here you can see that the curve has shifted to the right hand side. Now, what is the reason why this curve has shifted to the right hand side? What can be the reason? Can you please imagine that previously the price was $12 and at $12 you were able to sell 1,250 units. Now, by keeping the same price, now what you're doing, you're able to sell 1500 units, right? By keeping the same price, you are able to sell
So
1500 units. Yeah,
I think that will become from $10 to something like 8, right? Because it will not increase.
that will become, oh, my bad. It should be $8. Absolutely correct. Thank you. It should be $8. Yeah, it should be $8. So here in this case, you can see that if you have kept the same price, now you have to understand when consumer is ready to pay whatever amount, right? When consumer demand increase, absolutely correct. Proportion of income spent on the product, disposable income has increased, right? Change or increase in the income, absolutely correct. I will discuss it again, no problem. Change in consumer preference. See here what I've done, I have drawn the normal diagram. Here in this case, you can see what I've done. I have drawn the normal diagram, right? So this is the normal diagram which I have drawn, right? This is the normal diagram. What I've done here, I have drawn, right? So this is the old curve. This is the old curve. So when the price was $10, we were able to sell here 1000 units, right? Here in this case, you can see that the when price of product was $10, right? Here I will write down the price and quantity, right? This is the old quantity, and here this is going to be new quantity. This is going to be new quantity. So when the price of product was $10, right? When the price of product was $10, we were able to sell here 1000 units. But now you can see there's sudden shift in the demand. Now, till now, what we have done, we have seen that when we reduce the price, then the quantity demand increases. But here in this case, you have not reduced the price. Here you have not reduced the price, and the quantity demand has increased here. Right? So quantity demand has increased by, let's say, 250 units. Now you are able to sell here 1200 units. We can say you are able to sell 1200 units. The price is $8, and here previously you were able to sell 1250 units. With the same price, now you are able to sell here 1500 units. Now, if I take the best example here, so India is the best example, right? India is the best example to understand this thing. Now we know that India is the emerging country, right? India is the emerging country, right? Now, if you will go to out of your house, right? Let's say on Monday, you have planned that you will go to somewhere. You are working from home or you are doing graduation and you have planned that you will go somewhere in the morning. So it will take huge time to reach your destination. What is the reason why it will take huge time to reach your destination? Because of the traffic, right? And in last 1 decade, if you will see that there is all of sudden increase in the vehicle, right? You will find lot of vehicle on the road. Why we are saying that you will find a lot of vehicle on the road? Because India is the emerging nation, and here the you can say per capita income of India has increased, right? In last 1 decade, we have seen that the earning capacity of Indian public has increased, right? So if your earning will increase, what first thing you will buy? You just imagine that once you will join the job, right? First thing we plan to buy, that is car or bike, right? The first thing which we buy, that is mobile or car or bike. So if you're passionate about bikes, you will buy the bike, or if you're passionate about cell phones or gadgets, so you will go and prefer to buy the cell phones. Hopefully, I'm making sense here. So you will find that there will be huge traffic on the road. Why there will be huge traffic on the road? Just because now everybody is able to afford four-wheeler. Just because of the EMIs, credit, and increase in the income, everybody is able to afford the uh, cars and mobile phones. So you have to understand that whenever the disposable income increases, right? Whenever the disposable income increases and the consumer is ready to pay any price, right? Consumer is ready to pay any price, or consumer is ready to buy that product, right? So you have to understand it will shift the graph towards right hand side, right? It will shift the graph towards right hand side here. So you can see you kept the same price, and you can see there is significant increase in the uh, demand of product. Same thing goes with the COVID. Somebody has given the example of COVID, right? Now, during COVID, we have seen that the consumption of Dolo medicine, I guess you might be knowing about the Dolo medicine, right? So during COVID, some companies they have spread that Dolo is able to cure the COVID disease, right? COVID virus. So what people they have done, they have started consuming Dolo a lot, right? So there was all of a sudden increase in the demand of Dolo. They were selling that product at same price. Or if I take the example of mask, sanitizer, etc., right? So there was shift in the demand curve, right? During COVID, we have seen that everybody was buying sanitizer. So now, if Everybody is buying sanitizer. So this curve will move towards the right hand side. So you can see if there will be significant increase in the demand, right? If there will be significant increase in the demand, so it will move your curve to the right hand side, right? It will move your curve to the right hand side. Am I making sense here? Is it here? Disposable income means that now what you can do, you can spend more. Now, if you have heard the budget, right? Recent budget, right? If you have heard the budget 2025. Now, in budget 2025, what our finance minister, Nirmala Sitharaman, she has done, Nirmala Sitharaman, she has proposed that anybody who earns up to 12 lakh rupees, right? Up to 12 lakh rupee, you don't have to pay tax in India, right? I'm talking about India. So in recent budget in the month of February, the finance minister, she has proposed that anybody who earns up to 12 lakh rupees, you don't have to pay the tax, right? So she has increased the slab here. So according to the old slab, if somebody was earning 7 lakh, right, up to 7 lakh, they were not liable to pay the tax. This limit has been increased. Now, if let's say up to 12 lakh rupees, you don't have to pay tax. So you will be able to save the major chunk of tax. Let's say you earn 12 lakh rupees. So in this scenario, now you don't have to pay the tax. So you are able to save, let's say, tax liability of 1 lakh. So here, if you're able to save 1 lakh rupees, right, from the tax. So obviously what you will do, you will use this money, right, for the acquisition of some luxurious goods, right, or your deemed product. So in this situation, this is going to be considered as a disposable income. This is going to be considered as a disposable income. Is it clear? Chal. Having money to buy more necessary items. So hopefully you understood what I said right now. So we can see and we can try to understand more here. So I was discussing about the movement of curve towards the right hand side. So you can see a rightward shift of the demand curve implies something has caused an overall increase in consumer demand. The entire demand curve shifts to the right to indicate that consumers are now willing to buy more goods at every price. At every price, the quantity demanded will be higher on the shifted uh, demand curve, right? So here in this case, your demand curve will move towards the right hand side. So if demand curve is moving towards the right hand side, it means that consumers, they are crazy about the product, right? Whose curve is shifting towards the right hand side. Now, if I take the example of not Gen Z, now the term will be different. The people who are 20 years and 21 years old, or the college students in recent trend, if I say, so they prefer to buy a lot of gadgets, right? So I don't remember what kind of gadgets they prefer. If I take the example of PlayStation, if I take the example of drones, right? So if you will see that in last 5 years, the consumption of drone has increased significantly. So this will shift the curve towards the right hand side, right? This will shift the curve towards the right hand side. So now, if you will see in last 5 years, the consumption of drone has increased, and post COVID, if you will see the demand of the scenario of entire economy has changed, right? So I guess you are able to understand what I've explained to you right now. Gen Alpha. That's correct, channel 5. So here in this case, you can see that what can be these scenarios, right? What can be these scenarios for the rightward shift in the demand curve, right? In which cases you will find that the rightward shift in demand curve will take place. So rise in demand for EV vehicle, right? So we have seen that in last 5 years, there is significant use of EV vehicles has taken place, right? Because petrol has become costlier, right? Petrol is becoming costlier day by day. So what people they have done, they have started buying the EV vehicle, right? So what are the factors which will affect the rightward shift in the demand curve? Increase in income, right? If the income will increase, so we can correlate this with the EV vehicle. You have to understand that EV vehicles are comparatively costlier, right? But if you will see the overall economies of EV vehicle, so in future it will definitely reduce your cost, right? Or overall cost will get reduced because in case of EV vehicle, you will get extra mileage, right? And cost of electricity is comparatively less than the petrol. So overall benefit is going to be comparatively better than the petrol vehicle. If you are riding, let's say 100 kilometer or 200 kilometer on daily basis. So if your income will increase, definitely what you will do, you will prefer to buy the EV vehicle because your disposable income will also increase. Change in consumer preference, right? Now, there are a lot of consumers who do not prefer to use electronic vehicle, right? They are quite, responsible towards the society or economy. So they prefer to buy the eco-friendly transportation, right? They prefer to use the eco-friendly transportation. In that case, you have to understand that again, the EV vehicle demand will increase. Yeah, Tesla. Tesla is the best example. Omashi has suggested, and that's why here Tesla in India, they are starting their business, and it will affect the demand of Indian automobile sector for sure. But let's see what is going to be the situation. Price of substitute increase. Now again, EV vehicle we can see the price of petrol has significantly increased, right? So that's why what people they are doing, they are prefer to purchase EV vehicle, right? Then government policies and subsidies. So in India, there is tax benefit provided for the EV vehicles, right? There is tax benefit provided for the EV vehicles. So if somebody is buying the EV vehicle, right, and if you have borrowed loan, right, let's say you have purchased the EV vehicle of 20 lakh and you have borrowed the loan of 20 lakh, right? You have borrowed the loan of 20 lakh. Now, what do you have to do? You have to pay the interest for this loan. So let's say in first year, you have paid interest, that is 1 lakh 80,000 rupee. Right? In first year, what you have done, you have paid interest that is 1 lakh 80,000. So you have to understand that this interest payment will become tax deductible. Right? This interest payment will become tax deductible. It will be deducted from your income. Right? So let's say if your salary is 10 lakh. Right? Let's say if your salary is how much? It is 10 lakh rupee. So you have to understand that here you will get the deduction if you're buying the EV vehicle, right? So your deduction amount will be 1 lakh 50,000. So the maximum deduction which you will get, that is 1 lakh 50,000 as per the income tax section. So here you have to pay the tax on only 8 lakh 50,000. So obviously government policies also boost this thing. That you have to understand that government policy will also boost this thing. Definitely, absolutely. If any subsidy is provided, it will definitely increase the demand of that particular product. You have to understand that if government is favoring that product, if government is providing the subsidy for EV vehicle, so the demand of that product will for sure increase. I guess you're able to understand what I've said right now. So future price expectation, these are the factors. Now here we can see the next. So you can see that Tesla demand skyrocketed. Omar Singh has said that Tesla demand has skyrocketed and same thing is given here, right? So you can see Tesla demand skyrocketed leading to the record sales and long waited period for the delivery. So this is the best example. So I guess you understood when the shift will move towards the right hand side and what is going to be the effect, right? If the shift will move towards the right hand side. So I guess you understood, right? Here, when the demand of product will move towards the right hand side and what is going to be the situation. Now, there is another case, demand, decrease in demand or leftward shift of the demand curve. Now, if the demand curve move towards the left hand side. Now, what is going to be the scenario when the demand curve will move towards the left hand side? We can see here the situation. Here, I will draw the graph quickly. So this is the graph given here. Right? This is quantity and this is price graph. Here in this case, you can see that you are able to sell one product at $100, right? Currently. And here you are able to sell how many units? Here you are able to sell, let's say, 1,500 units. 1,500 units. If you will further decrease the price, right? So here in this case, you are able to sell, let's say, 2,000 units, right? So here, let's say price is $80. Now, when the demand will move towards down one side or left hand side, right? When the demand will move towards the downward side or left hand side, when the demand will decrease, right? You have to understand when the demand will decrease. Here, in case of first scenario, we have taken the example of EV vehicles. Can we take the vice versa example for downward movement of demand? Can we take vice versa example in this case? Petrol vehicle, right? We can take the example of petrol and uh, absolutely solar equipment as well. Actually, you're talking about environment awareness, absolutely. Yeah. So in this case, you can see that if I take the example of petrol vehicle, now after the introduction of EV vehicle in India, you will find that the petrol vehicle demand has comparatively reduced. Now, you know what government has done? Indian government has framed various policies. Now, government wants that after year 2030, right? After year 2030, they should start producing the petrol vehicle, right? Government wants that after year 2030, right? They will stop producing the petrol vehicle. What is the reason why they want to stop producing the petrol vehicle? Because just because of the petrol vehicle, you will find that the pollution is increasing and it is not at all eco-friendly. It is not at all eco-friendly. Hopefully, I'm making sense here, right? Even the US government has decided that they will stop producing the petrol vehicle after year 2030. So if the government has decided they will stop producing the petrol vehicle after 2030, so for sure the demand of that product will reduce, right? Because you know that after 2030 there will be no existence of petrol vehicle, right? And there could be a chance that government may completely ban the petrol vehicle maybe after 2035, right? Government may completely ban the petrol vehicle after 2035. So why you will buy the petrol vehicle? You will go for the EV vehicle, right? And apart from that, if you will see that the petrol price is skyrocketing, right? Petrol price is skyrocketing, right? So that's why here you have to understand that the demand of car is reducing. Which car? Petrol car is reducing here, right? The demand of petrol car is reducing. So if I take the example of let's say Ford, right? So Ford was having its factory in India, right? I guess 2 or 3 years back, they have closed their entire business from India. If you track the news, so you might be knowing about the Ford, right? Ford was having its factories and several showrooms in India. Now, what they have done, they have closed their entire business from India. Why they have closed their entire business from India? Because the demand of Ford vehicle has significantly decreased. Or we can say the demand of petrol vehicle has significantly decreased. So when the graph will or the curve will shift towards the left hand side, leftward shift of the demand curve implies something has caused an overall decrease in the consumer demand. The entire curve shifts to the left to indicate that customers are now willing to buy fewer goods at every price. Right? Customers, they are not interested in buying the petrol vehicle. Right? This is going to be the scenario. Now we can read here. So you have to understand what can be the factors which will move the demand curve towards the left hand side or downward side. So if there is decrease in the income, this can be the one factor, right? If I take the example of let's say car. Now let's say people they are not able to afford the car, right? People they are not able to afford the car during COVID season, or if you will see the current economic situation, right? So there are set of group of people who are able to afford everything. But there are set of people in India, right? Or I can say 80% public. If I talk about the 80% public in India, they are not able or they won't be able to afford still the branded or luxurious goods. Right? Somehow they are able to survive. That is the biggest thing. But 80% public they won't be able to afford the car and these products. So you have to understand whenever there will be decrease in income, right? Whenever there will be decrease in income, there will be decrease in the consumption. Right? There will be decrease in the consumption. So first is decrease in the income. Second is change in consumer preference. When the demand of car will decrease, let's say the government has constructed metro, government has constructed, let's say government is providing metro facility, government is providing local train facility, bus facility. So in that scenario, what you will do, you won't prefer to buy the car because you know that if you will buy the car, you will get stuck in the traffic every day, right? So you know that if you will go by the metro or local train, it won't be taking much time to reach to your destination. So in that case, also you have to understand that there will be a decrease in the demand of product. Then price of substitute, price of complement, population decline, etc., will affect the demand of particular product, and it will move the product towards downward side. So major car companies like Ford, Honda, and Toyota reported lower petrol car sales. Companies are shifting their focus to EV production instead of petrol models. So I guess you got the idea when the demand curve will shift. So is there any question would you like to ask from this discussion which we have made? You can let me know. I will wait for 1 minute or 30 seconds, then we will proceed. So you can let me know if you have any question. Do you have any question from the discussion which we have made today? Gurjot is asking in coming year, auto sector will fall. I don't think so. In coming year, auto sector will fall because if companies like Tesla, they are planning to start their business in India. So they might have found that there will be huge demand of auto sector in India, right? So it is quite I'm also in dilemma, but I don't think so it will reduce. Because nowadays there are various options available that what you can do, you can buy a car even though you're earning 30,000-40,000 rupees. You can afford 10 lakh rupees car. Because NBFCs and banks, they are ready to give you an amount, X amount of loan. Right. So daily I receive call that do you want personal loan of 1 lakh, 20 lakh rupees? So they are ready to give you loan. And people who do not know how to, plan their finances, they definitely will buy the car and these luxurious goods. So there are less chances. And the best example is Tesla. So if Tesla is starting their business in India, so they know that there will be boom in this sector. So less chances are there. Yeah. So we have discussed this. Now, I guess we should jump towards the next concept, that is the supply curve, right? I guess you understood hybrid option. Yeah. So nowadays, most of the companies, they are manufacturing the hybrid cars where they are giving the option of both petrol and natural gas option, right? CNG, I guess. Yeah. So now we should proceed towards the next discussion, that is the supply curve, right? So if you understood the demand curve, then it is very easy to understand the supply curve. It is very easy to understand the supply curve, right? So quickly, what I will do, I will discuss about the supply curve, but I will start with the demand curve, so you will be able to compare and you will be able to, understand the concept easily. So in case of demand curve, we have seen that how do we draw the demand curve? Yeah. So here you can see demand curve is going to be the downward moving curve. So it starts from the left and it moves towards the right. Right. This is our demand curve. This is our demand curve. And in case of demand curve, guys, we have seen that there is inverse relationship between price and quantity. Right? There is inverse relationship, right, between price and quantity. Now, if I take the other example here, if I take the other example, let's say, if I take the example of supply curve. Now, how supply curve will looks like. When I'm discussing about the supply curve, what you have to do, you have to assume that I'm talking about the stock market. I'm talking about the stock market, so you will be able to understand better. You will be able to understand better if you will assume that we are talking about the stock market. Now, the curve of supply curve will look like this, right? Curve of supply curve will look like this here, right? So here, this x-axis is for the quantity, this x-axis is for the quantity, right? And y-axis is for the price. Y-axis is for the price. I guess you're able to understand. So here in this case, now you have to understand first thing that there will be a direct relationship between supply and price. In case of demand curve, we have seen that there will be an inverse relationship. There will be an inverse relationship between price and quantity. In case of supply curve, right, you have to understand that there will be an direct direct relationship between the demand, and price, or I should say quantity and price. It should not be demand, quantity and price. Direct relationship between quantity and price, right? This is going to be the answer here. Now, you just let me know that if you have purchased the share, right? If you have purchased the share of some company, let's say you have purchased the share of Reliance Limited, right? And you have acquired 1,000 shares. You have acquired here 1,000 shares. At what price you have acquired the 1,000 shares? You have acquired the 1,000 shares at $100. Right? What you have done, you have acquired the 1,000 shares of Reliance, not at $100, at 1,000 rupee, I should say. Right? Sometimes I will use the rupee. I should not use rupee, right? I should focus on the dollar only. But let's assume that here we are taking the example of Reliance. So now you just tell me that how you will sell these shares. How you will sell these shares. This is my question from you, right? So you have acquired this share at what price? You have acquired this share at 1,000 rupee, right? You have acquired this share at 1,000 rupee. Now, you know that the price of share will increase. Some good news company has disclosed. So when the price reached to 1,100, when the price reached to 1,100, right? What you have done here, you have sold your 100 or let's say 200 shares, right? You have decided that you will book the profit now. So here in this case, you have acquired shares at what price? You have acquired shares at 1,000, and when the price reached to the 1,000 and 1,100, 1,000 at 100. So here you have sold 2,000 shares, 200 shares. Here what you have done, you have sold 200 shares. So you have acquired how many shares? You have acquired 1,000 shares, right? Now, you know that further the price will increase. You are having some, you know, information. So here when price reached to 1,200, further what you have done, you have sold 200 shares, right? Further what you have done, you have sold 200 shares, right? Then when price reached 2,500 rupee, further what you have done, you have sold, let's say 400 shares, right? Now, further the price increased and price reached to 1,700 rupee, right? Price reached to 1,700 rupee. So what you have done here in this case, you have sold the remaining 200 shares. Now, why you are selling the shares when the price is increasing, or why you held the shares till price reached to 1,700 rupee? So what we do, we make the prediction, right? What we do, we make the prediction, and here, let's say what I've done, I made an prediction, right? What I've done, I made an prediction that in coming time the price will increase. So gradually, what I've done, I started booking the profit, right? I started booking the profit, and this is how the smart investors, they buy and sell the security. So if you have acquired, let's say, 1,000 shares, now you want to book the profit. So you have done the analysis and you found that after a few days, the price reached to 1,100 rupee. So here, what you have done, you have sold 200 shares, right? I'm talking about the supply right now. You have to ignore the demand. You have to keep the other concepts constant, right? And you have to focus on the only supply right now, right? So in this case, further the price increased to 1,200 rupee. Then you have sold further 200 shares. So you can see that there is direct relationship between supply and price. You have to understand when the price increases, the supply will also increase, right? When the price increases, the supply also increases. So what generally businessmen do, they wait, right? They keep the stock on hold and they start selling the product when the price gradually increases, right? When the price gradually increases. Now, if I take the example, you can take the example of anything, right? Now, during COVID, people, they were knowing that, there will be the huge demand, right? There will be huge demand for certain products, right? And if the demand of any product increases, right? If the demand of any product increases. So now if I talk about the suppliers, if I talk about the business, so what business do, right? Business, they maintain the inventory of those products. They know that the demand of product will increase, and intentionally they keep the inventory of their product in the warehouse, right? Now, if I take the example of COVID, so during COVID, the consumption of cycle was increased, right? During the COVID, the consumption of cycle was increased, right? People, they have purchased cycles a lot, right? Why people they have purchased cycles a lot? Because we have seen that during COVID, everybody was thinking about the fitness, right? Everybody was thinking they were having enough free time, so they have thought of the fitness. They have decided that they will do exercise on regular basis, and the consumption of cycle got increased all of a sudden during the COVID, right? So what the cycle businesses they have done, they have maintained the inventory, right? They have maintained the inventory. They have order goods from various places. So I can give you the practical example. One of my friend is into the cycle business. He is the wholesaler of cycle, right? And there was sudden increase, there was sudden spike in the demand of cycle that he was not able to fulfill that demand. He was not, and he was charging, X amount for every cycle. So let's say before COVID, the price of that cycle was 1,000 rupee. So he has charged even 2,000 rupee for a cycle because people were crazy. They were ready to pay X amount for the cycle. So what he has done, he has imported cycle from the China. Right? During COVID itself, he has imported cycle from the China. So Indian companies, they were not able to fulfill the demand. So what he has done, he has imported the cycle from China. He has imported somewhere around 5,000 cycles from the China. He kept that into the godown. And later on, what he has done, he has sold the entire cycle. So whenever the price was increasing, what he was doing, he was selling those cycles into the market. So you have to understand this is the concept behind supply. Is it clear? This is the concept behind supply. Yeah, definitely. Technology, pharma, absolutely correct. Right. In pharma, we have seen that these companies, they have charged huge amount for the medicines. Even though hospitals, what they have done, they have made huge profits. So sir, does it depends upon how may share we want to sell or particular price, or does it depend upon the demand? See, it mainly depends that, see, if I talk about the supplier, you have to understand that here you have to think like a supplier mindset. Right. So supplier mindset will say that when the price will go up, then what I will do, I will sell my inventory. Right. If you are a businessman, so if you know the economic situation, right, you can imagine, you can do the research, right, that currently the economic situation is good, right? Currently the economic situation is good, and you know that the price of your product will increase, right? So what you will do, you will hold that inventory, right? And whenever the price will increase, at that time you will sell the inventory. See, there are two concepts which you have to remember if you want to understand this. See, if you feel that the price will fall, right? If you feel that price will fall, currently you have the shares of Reliance Limited, right? Let's say you have the 1,000 shares of Reliance Limited. Now, if you feel that the price of Reliance share will fall, right? Price of Reliance share will fall. So immediately what you will be doing, you will sell all your shares, right? You will sell all your shares. So you have to understand that if price will fall, you won't keep the inventory. You won't keep the inventory. You will sell the entire shares today itself. Now, if you will see the current Indian market scenario, so why the market is falling, right? Market is falling just because there is a panic situation in the market. That market will further fall, and people, they are selling their, they are clearing their stocks immediately. But if I talk about the supply concept, right? So supply concept believes that the price will increase, right? And what we do, gradually we dispose our inventory, right? Gradually what we do, we dispose our inventory. So if I have, let's say, 10,000 units of phone, I have 10,000 units of phone, and I know that, the demand of phone is increasing every day, or I'm into some business, right, where the demand of gadget is increasing. So what I will do, gradually, I will sell the product, right? I won't keep the entire inventory with me, but gradually what I will do, I will sell the product, right? So whenever I will get the best price, I will start selling the product in the market. So this is the concept of supply curve, right? So we will discuss more, so you will be getting more clarity. So here in this case, you can see that supply curve is the graphical representation of the quantity of goods or service that a supplier willing offers at any given price, right? They represent how supply works, right? So further you can see here, this is the curve given. We have already discussed about this, right? So now we have to understand that when the supply curve will move towards downside and when the supply curve will move towards the right hand side, right? So here we have to discuss about the shift of curve, right? I guess you understood. So in case of supply curve, you have to understand that supply curve will move towards the up and side when the price will increase. So if price will increase here, right? If the price will increase here, you have to understand that the supply of quantity will also increase. Right here, when the price will go up, the supply of quantity will also increase. In case of demand curve, we have seen when the price go down, right? When the price go down, then the quantity demand increases. So the vice versa situation is there. I guess you are able to understand, right? So what we will do, we will discuss about the shift of curve, but I guess we should take now pause. Otherwise, you won't be able to grab much things. So we can take a pause of 15 minutes, right? And then we can proceed. Is it okay if we take a pause? Yeah. So we can take a pause, then we will continue, right? So 15 minutes pause we will take and then we will continue. Chala. Yeah. Great, great. Yeah. So shall we proceed, guys? Shall we proceed? I can see some questions has been asked. Vanshika ji has written some message. So, sir, I get it. Someone we are supposed, yeah, we are supposed to sell the shares in both situations when the price falls or increases. What it meant was the number of shares, how many shares we are supposed to sell for particular price. Does it depends on the market demand or it depends on our willing? Like you told, $1,100, 200 shares. So you are selling the shares according to the demand or willing. See, basically here, if I talk about the supply, right? So you are talking about the shares where we will sell the shares as per our own research, right? So if we feel that the market price of share has increased, right? Here, see, you cannot predict the market price of share. You cannot predict the market price of share here, right? So in that case, what we do, you can predict, but you cannot certainly predict it. Now I can show you the graph here, right? I can show you the graph. So let's see, Reliance share price. Right, we can see here the graph. Let's see this graph. So you will be getting more understanding. So I guess you're able to see this graph, right? It is not visible. Yeah. Why they are not? Actually, no chart is available. How come no chart is? Actually, today is Sunday. That's why the chart is not available. Zomato. Today is Sunday. They are not showing the chart. Here we can go to the moneycontrol.com. On Sunday, they do not show the chart. How is it possible?
Sir, it's selected at 1 day.
Okay, we can go to the trading view also, where we have selected the 1 day.
So in Google, it was selected at 1 day. So yesterday was Saturday, no?
Okay, okay, okay. Okay, that's correct. Yeah, we can take care. Absolutely. Thank you. So in this case, you can see that if you will see the fluctuation in price, right? Now here, if you will see that the entire chart fluctuates here, right? If you will see there is downfall in the price, but here when the price increases, right? So here you can see when the price increased here in this case, right? At this point, price got increased, right? Here, in this case, you can see price got increased. So what the suppliers or the holder of shares they have done, they have sold the shares, right? They have sold the shares. See, when you are learning about the supply uh, concept, so you do not have to mix that with the demand, right? Right now, you have to think about only the supply. Other things will be constant. Now, here in this case, you can see that when the price reached to 255 rupee, right? When the price reached to 255 rupee, what suppliers they have done or what sellers they have done, they have started selling the shares. And whenever the price will increase, again, you can see there is an increase in price, right? Price reached to 260 rupees. Again, what sellers they have done, they have sold these shares, right? So this is how this graph or the market works. So whenever you will find that the price increases, why price will increase? Now you can connect this with the demand. So when the price of product will increase, then when there will be huge demand of the product, right? So here at this point, customers, they are demanding your product a lot. So what you will do, you will immediately sell because you are getting higher price for the product. Then all of a sudden, when you will supply the product, right, then you will see that the product of price will fall, right? The demand will decrease. And again, the demand will increase in certain period. Then again, you will sell and the price will decrease. So supply, if you will read about the supply, so supply works on the basis of sell price. So whenever the sell price or the market price increases, supplier supplies the product more, right? So if I take the example of a car manufacturing company, right? Car manufacturing company. Now, if I take the example of, let's say, phones, right? Or the best example is earbuds or smartwatches. Now, if you will see that from last few years, or mostly it was before the COVID also, that the supply of these gadgets like earbuds, smartwatches has increased significantly. Why the supply has increased significantly? Because the price of these products were increasing, right? Or there was a great demand. There was a great demand. So the business were able to make huge profit of it. So they were supplying their product, right? They were supplying their product a lot because they were able to sell that product, right? They were able to sell that product. Now here with this concept, why I have taken this example, because we have to understand about the shift of the curve. Now, when the supply significantly increases, right? Now, there can be various factors due to which the supply will increase. So you have to understand that there could be one scenario where the supply is increasing because of the increase in price, right? The supply is increasing because of the increase in price. This can be the one factor. But here in this case, you can see that there is a direct relationship between price and supply, right? So here the price is increasing, the supply is also increasing. I can take the example of, let's say, Apple here, right? I can take the example of Apple. Now, every year, what Apple do? Apple launches the new product, right? And you will find that Apple supply that product in huge quantity because Apple increases the price also, right? You will find that every year the price of Apple product increases, right? And there are some crazy customers who will definitely buy the Apple product, whatever is the price. So here we can take the example of Apple. The price increases and supply also increases. But if I talk about the shift of curve, right here in this case, you can see that there is downward shift in the curve, or there can be another scenario where there can be the upward shift in the curve. Now here you can see that at $5, right, the company was previously able to sell or supply 100 units, right? Company was able to supply 100 units. Now, at same price, right, company is supplying 200 units. At same price, you can see company is supplying here 200 units. Now, what could be the reason here? In previous case, we have seen when the demand curve moved towards the right-hand side. So we have seen consumer, they were ready to buy those products, right? There was high demand for the product. That's why the demand moved towards the right-hand side, right? This was the graph which we have discussed for the demand, where we have seen that the demand curve moved to the right hand side, right? Demand curve moved to the right hand side. And here we have seen that consumer is ready to buy this product at any price, right? Consumer is ready to buy this product at any price. And that's why demand is increasing. Now, here in this case, you can see that vice versa situation will be there. Here, the supplier or business is ready to supply, right? Business is ready to supply the product, right, at the same price or whatever price. There is excessive supply here in this case, right? So now we have to discuss about the shift of supply curve. We have to discuss about the shift of supply curve. Now, there will be two shifts. One is going to be the right hand shift, and second is going to be the left hand shift. Right. So we can see here that what can be the reason why the graph will move towards the left hand side and right hand side. So here you can see real world example for the leftward shift in the supply curve. Right. So what is the meaning of leftward shift in the supply curve? Here in this case, we can see. Yeah. So this is the supply curve. Where you can see this is the supply curve. And here you are able to sell at $10, right? At $10, you are able to sell how many units? You are able to sell here 100 units, right? And here, if curve is moving this side, right? If curve is moving this side, so we can say there is
Sir,
excessive supply. Yeah.
then it would be rightward shift, no?
I will draw the both side curves here. So if curve
No,
is
no,
moving this side,
the
come
rightward
again.
shift is caused because rightward shift is caused when the supply decreases, no, when like not decreases but increases in fact on the same price.
No, I'm not able to understand what you have said.
The rightward shift of the supply curve is because of the natural disaster and all this thing that you have shown on the thing, but it's written leftward, so that's why I got confused with that.
Acha, you are saying that there is a typo error. No problem. I will correct that typo error. First, we will try to understand with the help of graph, right? So you will be getting more clarity here. So, what I was saying here that there can be shift, right? There can be two ways of shift in the graph. One is going to be rightward and second is going to be leftward here, right? Now, here in this case, you can see This is the one shift, and we can add here the another shift also, right? So graph can shift in two ways, right? Upward and downward, or leftward or rightward. Now here in this case, you can see that at same price, what the supplier is ready to do, supplier is ready to supply new product. Now, what can be the scenarios here in this case? Right? What can be the scenarios here in this case when the supplier will be able to supply more products at the same price? Any idea what can be the reason why supplier will be able to supply more product at the same price? Any idea?
Government benefits.
Government benefit and what else? Any idea? If I take the example of I have taken the example right away. Right away I've taken the example. Now the best example we can take, that is the boat example. Right. Now if you will see here that there are a lot of companies in India, a lot of startups are there, right, who have flooded their products in the market, right? Who have flooded their products in the market. Definitely benefit of scale in economies, unit economies. That is the absolutely correct. Now you have to understand that what is going to be the advantage if the producer is ready to supply the product at same price. Right? Let's say here, I can take the example. There is a business which manufactures the product and their fixed cost is $100,000. Right? Their fixed cost is $100,000. So let's say you have started a factory. Right? Let's say what you have done, you have started a factory. Right? You have started a factory. Now here in this case, you can see that uh, there is fixed cost which you have to bear, right? So fixed cost is given here, that is rent cost, right? Fixed cost is given here, that is rent cost. You have to pay the salary, right? You have to pay the salary. Then there is some additional fixed cost which you have to bear, right? Let's say depreciation. So this is the fixed cost which you have to bear. And in total, your fixed cost is here $100,000. So fixed cost is the cost which will remain constant even though you're not producing even a single unit, right? So this is going to be your fixed cost. I guess you're able to understand, right? This is gonna be your fixed cost here in this case, right? Now you have to understand that fixed cost will remain constant, right? So downward curve, rightward curve, we will see, Vanshika. Just wait for 1 minute. I will show you the entire curve so you will be getting more clarity. But downward curve is going to be the right shift curve. Here in this case, fixed cost is given, that is $100,000, right? Now, let's say what you're doing, you're producing only 50,000 units, right? You're producing only 50,000 units, and the variable cost per unit is given. What is the variable cost? I guess you understand the difference between fixed cost and variable cost. If you do not understand quickly, I will give you the idea. Then we will do more discussion because this is the concept which I have to discuss in coming time. So I will give you the idea. So variable cost is the cost, which will change according to the production. Variable cost is the cost which will change according to the production, right? So the more you will produce, right, the more you will produce, the more variable cost you have to incur. I can take here the example, right? I can take here the example of, let's say, dairy business or bakery business. We can take here the example of bakery business. Now, in case of bakery business, you will find, right? In case of bakery business, you will find that to produce one cake, right? Let's say to produce one cake, company consumes 1 liter milk, right? What company do? Company consumes 1 liter milk, right? Now here, if company wants to produce, let's say 100 cakes, if company wants to produce, let's say 100 cakes, so how much milk will be required here? 100-liter milk will be required, right? If company wants to produce, let's say 1,000 cake, so here in this case, how much milk will be required? Here, the 10,000-liter milk will be required. You have to understand that 10,000-liter milk will be required. So this is going to be a variable cost. So I can give you the example of variable cost. It will include the raw material cost, right? Here, raw material cost is the variable cost. Then labor cost is also the variable cost. So if you want to produce more, you will require more labors, right? And there are certain other expenses. We can take electricity cost. Generally, electricity cost is a semi-variable, but let's say it is going to be the variable cost, right? Electricity cost is going to be the variable cost. So these are the variable costs. But if I talk about the fixed cost, so fixed cost will remain constant. So let's say what you have done, you have started in business and you have taken factory on rent, right? What you have done here, you have taken factory on rent. So even though if you won't produce even a single unit, right? Even though if you won't produce single unit, it will remain constant. So you have to understand that fixed cost will remain constant irrespective of production. Fixed cost will remain constant. Constant irrespective of production. I guess you are able to understand. Right. So in this case, if you have taken factory on rent, so you have to pay the rent even though you do not produce anything. You have to pay the salary even though you don't produce anything. You will charge the depreciation on assets even though you don't produce anything. Or you produce extra units, still the fixed cost will remain same. Now here in this case, you have to understand that you are running a business where the fixed cost per annum is $100,000, right? And variable cost per unit is given, let's say $10. Variable cost is how much in this case? Variable cost is $10 per unit, right? $10 per unit. Now here in this case, uh, we are assuming selling price of product is, let's say, $20 per unit. Right? Selling price is how much it is? $20 per unit. Now let's say here I will take various examples, so you will be getting more clarity. So what do you do? In first year, you have sold 5,000 units. Then in first year, what you have done, you have sold 5,000 units. Then in second year, 10,000, and this is how the increase in units has taken place. Just give me 1 minute time. Yeah. So my bad. Here we can see that you are able to sell 5,000 units, right? Then you are able to sell here, let's say 10,000 units. And then you are able to sell 15,000 units, right? 15,000 into 10. It is going to be 15,000. Then here you can see you are able to sell 20,000 units. So what is going to be your total sales in this case? If the sell price is $20, right? So here in first situation, your sales is going to be $100,000, right? 5,000 into 20. Then it is going to be $200,000. Right? Then in next scenario, it is going to be $300,000. Listen to me very carefully. This is important concept which I am trying to make you understand. So you will get the clarity. It is here $400,000, right? Then here variable cost is given, that is $10. So I guess you understood variable cost. What is variable cost? If you have any question, if understanding this, so you can let me know. So variable cost is $10 here. So it is going to be $50,000. How I've calculated this? $10 multiplied with units, right? $10 multiplied with units. Same I have done for the sale price, sales into units. So here it is going to be how much? It is going to be $100,000. Here it is going to be $15,000, $150,000. Here it is going to be $200,000, right? So you can calculate the contribution here in this case. So we can find out the contribution, right? How much is going to be contribution here? Contribution is going to be $50,000. Here it is going to be $100,000. Here it is going to be $150,000. Right, and here it is going to be $200,000. So then we can subtract here the fixed cost. So how much is the fixed cost here? Fixed cost is $100,000. Right. Here fixed cost is how much it is going to be same in all the situations because fixed cost is the cost which won't change, right? So there is the another scenario behind fixed cost that we will discuss later on. But here, this is going to be the situation here. So here in this case, you can see that what is going to be your operating income. So here operating income is going to be negative. Then if you see when you have increased your production, here your operating income is zero now. Further, when you have increased your production, right? Here you can see your operating income is now $50,000. Further, when you have increased your production, right, you can see your operating income is increasing. Yes or no? Your operating income is increasing here. Am I making sense? Am I making sense here? In today's class, I will cover. Just we have time. I will cover it. Yeah, because I will cover it. So now, if you see here in this case that when you're producing more units, like when you are producing more units, so you are able to recover your fixed cost, right? Here in this case, you can see just because when you are producing you are producing more units, you can see the cost of production is reducing, right? You can see that here the cost of production is decreasing. How come the cost of production is decreasing? Let's calculate the cost per unit here, right? What we will do, we will calculate the cost per unit, and you will be getting more clarity, and then you will understand this concept, right? Okay, now my first question is that when company will produce more? This is first question which I would like to ask you, that when company will produce more? Company will produce more when there will be demand of product. Yes or no? Company will produce more when there will be demand of product. Now, if I take the example of companies like boat, how these companies they are about to get listed into the stock exchange. If I take the companies next company example, Lenskart, how these companies are about to get listed into the stock exchange, right? So you have to understand that there's a huge demand of their product in the market, right? And that's why they are able to supply, right? If there will be product, then you will be able to supply. Now here in this case, how it will give you the benefit if you will produce the more product? Let's see. So you can see your operating income we have calculated. So if you're producing more, so your business will become profitable. And here we have seen that business became profitable when we are producing more. Now, can we calculate here the total cost? TC stands for the total cost. So total cost will include variable cost plus fixed cost. Right? Total cost will include here variable cost plus fixed cost. So I will take here the variable cost. This is the entire variable cost, right? And this is the entire fixed cost. So is it possible for us to calculate the fixed cost in case of each unit range? Yeah, we can calculate it, right? So if you want to calculate the total cost, so we have to take the sum of 50,000 and $100,000. That is going to be $150,000, right? Then 100,000 plus 100,000, that is going to be $200,000.
Um,
Then
Sir, I'm
100
getting confused. Can we rewind it a bit?
no problem. In which point you're getting confused?
Sir, after the contribution part, I'm getting very confused.
No problem. Acha, so I'm assuming that you understood how we have calculated the contribution. See, there is a specific format which we follow to calculate the operating income. My bad, I should have first discussed about the format. Why will discuss it? Sorry. Here in this case, you can see that, when we prepare the income statement, this type of income statement you will learn in other modules. So here, when we prepare the contribution income statement, we call it as a contribution income statement. Listen to me very carefully, right? You will get the understanding. So when we prepare the contribution income statement, right? So what we do first, we record the sales. Once you have recorded the sales, after that, you have to subtract the variable cost. Is there any question about variable cost? Is there anyone who is not able to understand what is variable cost? So raw material cost, labor cost, right? Electricity bill. So the more you will produce, the more cost you have to bear. That is what a variable cost. Are you able to understand? The more you will produce, the more cost will increase. So if I take the example of bakery business, So obviously, if you will produce 100 cakes, you will require 100 liter milk. You will consume more sugar. So let's say to produce one cake, you consume half kg sugar. So if you want to produce 100 cakes, you will require 50 kg sugar. Similarly, you will require more chefs, right, who can or bakers who can bake the cake, right? So if let's say you are running a factory, you have started a factory, so there you will require more labors. So that is going to be the variable cost, right? Once you subtract the variable cost, then you find out the contribution. You find out here the contribution, right? Now, once you will calculate the contribution, then we subtract the fixed cost, right? Fixed cost is the cost or permanent cost, which you have to bear even though if you are not producing anything. So let's say you have taken building on rent, so you have to pay the rent. You have hired some employees to whom you have to pay the salary, right? Apart from this, you will charge depreciation on machinery. So this is going to be the fixed cost. Once you will subtract the fixed cost, right, then you will be able to calculate the operating income. Then you will be able to calculate the operating income, right? So this is how what you can do. You can find out the operating income, operating profit of the business. Here, what I've done, I have calculated the contribution. So I have shown the entire sales. So how I've calculated this sales? So we have produced and sold 5,000 units. So 5,000 units into $20 because selling price of per unit is given, that is $20. So if you will multiply the $20 with 5,000 units, you will get here the sales that is going to be 100,000. Similarly, what I have done, I have calculated the sales for each value, right? Similarly, what I have done, I have calculated, so contribution means here there. That's a great question you have asked. See, contribution means that after adjustment of variable cost, right? We have to discuss about the break-even point. I will come to that point, but let me explain you what is contribution. See, here when you run a business, right? When you run a business, right? Now you have to understand that in case of business, you will incur two types of expenses, right? You will incur two types of expenses. One is going to be the recurring cost. One is going to be the recurring cost related to the operations, right? So let's say here we are assuming that recurring cost, here we are assuming that recurring cost related to the operation of production. So what is going to be recurring cost? You have to understand that, let's say what you are doing, you are manufacturing 100 cakes, right? You are producing 100 cakes. So for 100 cakes, you are consuming raw material of $100, right? When you are producing 200 cakes, you are consuming raw material of $200. So can we say that your raw material cost is synced with the cakes? The more cakes you will produce, right? The more cakes you will produce, your raw material or variable cost will gradually increase. If you're producing 300 cakes, so here raw material cost is $300, right? Now you can see your variable cost we have written here. Now you are able to sell this product, the product which you have manufactured. So you are able to sell, let's say, one cake at $2. You have produced 100 cakes, and if you are able to sell one cake at $2, so what is going to be your sales value here? It is going to be $200. Right here, you are able to sell one cake at $2 again. So $2 into 200, if you will do, so here your sales is going to be $400. Again, you are able to sell one cake at $2. So it is going to be $600. Now, what we do whenever we subtract the variable cost, right? Whenever we subtract the variable cost from sales, so we get the contribution. Now, contribution sounds similar to the gross profit, but it is not an gross profit. What we do, the purpose behind calculation of contribution is, so we can find out, that after adjustment of recurring cost, after adjustment of our recurring cost, what profit remains, right? What profit remains through which what we can do, we can bear our fixed cost and we can make out some profit. Here, if you see this case, so we have adjusted we have calculated here the contribution. Now, from contribution, what I'm doing, I'm subtracting the fixed cost, right? And my fixed cost is greater than contribution in first case. My fixed cost is $100,000, whereas my contribution is only 50,000. Here I'm making loss here, right? Here what I'm doing, I'm making loss. So with the help of contribution, what I do, I try to find out whether I'm able to generate sufficient contribution so I can bear my fixed cost And after bearing my fixed cost, I should be able to make some profit. Now, here in this case, you can see that my contribution is $100,000 and my fixed cost is also $100,000. And my operating income is how much here? It is zero. It means that minimum units which I have to sell, right, to reach to the break-even point is 10,000 units. You have to understand that if I will be able to sell 10,000 units, if I will be able to sell 10,000 units, right? So my operating income will be zero. Why my operating income will be zero? Because here my sales is of $200,000, my variable cost is of $100,000, right? And contribution is of here, you can see $100,000. Now from contribution, once you will subtract the fixed cost, right? From contribution, once you will subtract the fixed, your
Contribution
voice is
gross.
breaking. Ratio voice is breaking. You can speak again. Yeah. So you can write it down if operating profit sometimes we consider as a EBIT. You are correct. In general sense, it can be EBIT. No, contribution is not gross profit. It is quite different, right? In gross profit, when we calculate the gross profit, we adjust the COGS. So COGS includes the fixed cost, right? But when we calculate the contribution, we take here the only variable cost. We take here the only variable cost, right? So there is a slight difference in the contribution and gross profit. So So in this case, you have to understand contribution tells you, right, that if contribution is high, then you will be making the profit. So here my contribution is how much? It is $150,000. How I have calculated this, I have taken $300,000, which is my sales, and I have subtracted the variable cost. So my contribution is $150,000. Now from contribution, what I will do, I will pay $100,000, right? I will pay $100,000. That is the fixed cost, and balance amount is going to be my profit. So this is how we have calculated the operating income, right? Now, can we proceed ahead? Yeah. Now, what we can do, we can calculate here the total cost. I guess you got the idea. Don't worry, we will take a lot of cases, so you will be getting more and more clarity. Don't worry. So here in this case, we can see, guys, that what is the total cost? Total cost is the sum of variable cost and fixed cost. It is the sum of variable cost and fixed cost. So here variable cost is given and fixed cost is also given, right? So 50,000 plus 100,000, it is going to be 150,000. Then you can see variable cost is given $100,000 and fixed cost is given $100,000. It is $200,000. Then variable cost is given 150 and fixed cost is given $100,000. So the total cost is going to be $250,000. Then here in this case, variable is 200, fixed is 100. So it is going to be $300,000. It is going to be a $300,000. Now, what I will do, I will divide this value with the number of units, right? So how many units we have produced here in this case? We have produced here in this case, number of units that is 5,000, right? 10,000, 15,000 units. Then you can see 20,000 units, right? You can see here 20,000 units. So in this scenario, we can divide these values, right? Here we can divide these values and we can get the answer. So what is going to be the answer in this case? So we can calculate the total cost per unit. So what is going to be the total cost per unit? So in this case, 150,000 divided by 5,000 if I go. So that is going to be a $30, right? So the total cost per unit is $30. If I'm producing how many units? If I'm producing here the 5,000 units, so per unit cost is going to be how much? It is going to be $30. Now, if I'm producing here 10,000 units, so 200,000 divided by 10,000 if I do, so per unit cost is going to be $20. If I'm producing here 15,000 units, so here in this case, you can see that the total cost is how much? It is 250,000 divided by 15,000. That is going to be a $16, $16.67 approximately. We can take $17. Then if I divide 300,000 with 20,000, so here it is going to be $15. So you can see that when I'm producing more units, so gradually my cost per unit is reducing. And that's why my business became profitable here. Right? That's why our business became profitable, because cost of production is reducing. So this is the economies of scale. This is the economies of scale. Am I making sense here? Absolutely. This is what an economies of scale. If you will scale your business, if you will scale your business, so you will find that your business will start making profit, right? Economies of scale means that when you are scaling, your cost of production is reducing, right? When you are scaling, your cost of production is reducing. Now I will take the graph example here, right? Now you might be eagerly waiting that, sir, how we will draw the graph. I will come to this point. Yeah. So listen to me very carefully. So you will get understand the graph, and then we have to do more discussion. So you will scale the business till you reach, definitely I have to discuss the diminishing uh, margin point. We will come to this point. We will come to this point, right? Parth, see what we have done here. Just think like an entrepreneur, right? Just think like an entrepreneur, right? Let's say you are an entrepreneur and you have started a new business, right? You have started a new business. Now, you know that in first year, you will be able to sell how many units? In first year, you will be able to sell 5,000 units. Right now, if you will sell the 5,000 units in first year, right? If you will sell the 5,000 units in first year, so you have to understand that here you have to bear the fixed cost. Your fixed cost will remain constant, right? And your variable cost is how much? Your variable cost is $10. So at 5,000 units, your sales will be $100,000. Your variable cost will be how much? It is going to be $5,000. Your variable cost is going to be $5,000. And here you can see that your fixed cost is going to be how much? It is going to be $100,000. So when I'm doing the total of variable cost and fixed cost, so what is the total cost which I have incurred for the 5,000 units? I have incurred the cost that is $150,000. Right? If I talk about the 5,000 units, so here what I've done, I have incurred the total cost for 5,000 units. I have incurred the total cost, which includes variable cost. So variable cost is here $50,000. It is $50,000, and fixed cost is given here, that is $100,000. Right, that is here $100,000. So you can see in total we have spent $150,000. Right. So now we have produced 5,000 units and we have spent how much? We have spent $150,000. So if I calculate the cost per unit, so I will divide this with the 5,000 units, right? What I will be doing in this case, I will be dividing this with the 5,000 units. So once you will divide this with the 5,000 units, so what is going to be your cost per unit here in this case? Your cost per unit is going to be $30 here in this case, right? It is going to be a $30. When you're producing, let's say, 15,000 units, right? So in this case, what is your variable cost? Here, your variable cost of production is $150,000, right? So here, your variable cost is $150,000. Just look at the graph or table of 15,000 units, and your fixed cost is constant. Now you can see that your fixed cost is constant, right? Your fixed cost is constant. So this cost will reduce. You have to understand this cost per unit will reduce. Or if I further bifurcate this, let's see, we can calculate here the cost per unit of individual cost. So what is going to be the variable cost per unit here in this case? If I want to calculate the variable cost per unit, so for 5,000 units, you have incurred $50,000 variable cost. Can I divide this with the 5,000? Yeah. So variable cost per unit is going to be how much here? It is going to be $10, right? Similarly, you have incurred the fixed cost for 5,000 units, that is $100,000. So if I divide this with 5,000 units, so here in this case, it will be $20, right? So in total, your cost per unit is $30. In total, your cost per unit is how much? It is $30. Hopefully, I'm making sense here. Now, further, if you see when you have increased the production, so now you have produced how much? You have produced here 15,000 units. So variable cost which you have incurred, that is $150,000, right? So here you will divide this with 5,000 units. So here, what is going to be your variable cost? Your variable cost still is going to be $10. And if you will further divide this $100,000 with 15,000 units, you will find that your fixed cost will reduce here. Right? You will find that your fixed cost will reduce here. So what is going to be your fixed cost? 100,000 divided by 15,000. Your fixed cost is now, that is $6.6. That is $6.67. Approximately, we can take here this as a 7. So your cost is going to be $17. So when you're producing more units, you can see your total cost per unit has reduced. Why your total cost per unit has reduced? Because now you can see that fixed cost distribution has changed. So what is fixed cost distribution? So previously for 5,000 units, you have spent $100,000 fixed cost, right? So it means that for 5,000 units or from 5,000 units, you were able to recover $100,000. So you have allocated $20 for 1 unit cost, right? You have allocated fixed cost of $20 for 1 unit cost. Now, when you have produced additional units, you have produced this time 15,000 units. So now your cost will be allocated to the 15,000 units. So what is going to be the cost per unit? So 100,000 divided by 15,000 if you will do. So here your cost has significantly declined. You can see your fixed cost in second case is 1/3 of the previous fixed cost. That's why here your cost has reduced. That is what economies of scale. If you're producing more, so your fixed cost is reducing, right? Your fixed cost is reducing. Are you able to understand? So here, if your fixed cost is reducing, right? So this is going to be considered as a economies of scale. Am I making sense here? What I've said right now? Yeah. Yeah. Now, what I was saying here, operating income is the income which you have earned from the operations, right? Income which you have earned from the operations. So if you are a car manufacturing company, right? If you are a car manufacturing company, so whatever income you will generate from selling of car, right? Whatever income you will generate from selling of car. So let's say the selling price of car is uh, $10,000, and to manufacture this car, right? You have incurred some costs related to this car. Right. So the cost or operating cost which you have incurred. Now, what operating costs will include? Operating costs will include everything, right? I'm assuming that COGS also we have to include here. So it will include the manufacturing cost related to the car. It will also include the non-manufacturing cost related to the operations. So you have spent some amount on the advertisement of product. You have paid the salaries to the employees who have helped you in selling the car. Then you have incurred, you have paid the rent also. So once you will subtract the all operating expenses, let's say operating expenses of $7,000, so the balance amount is going to be your operating income, right? Here we have not adjusted the other expenses and other income. So if you earn rental or dividend income, that we have not adjusted. This is the core income from operation. This is the core income from core business, you can say, right? That is what an operating income. So here in this case, we have discussed. Now you have to understand that here in this situation, you are having power to reduce the price, right? You are having power to reduce the price. How come you are having power to reduce the price? Let's say you have the capacity to scale your production. You have capacity to scale your production. If I take the example of companies like Reliance Trend. Now, Reliance Trend, they have their offices or their branches across India. Why? Because they have production capacity. Just because they have this, economies of scale, they are able to produce more and they are able to reduce the price. And if they are able to reduce their cost per unit, so obviously they can also reduce the sell price, right? So if they will be able to sell their product at discount or at lesser price as compared to the competitor, so demand of their product will increase, right? The demand of their product will increase for sure. Hopefully I'm making sense here. So now you will be able to understand this graph in a better manner. That's why I've given you the explanation. So here in this case, you can see that previously what Reliance was doing, Reliance was selling their product, right? Previously Reliance was selling their product, let's say at $100, and they were charging here price that was somewhere around, they were able to sell, let's say, 1,000 units. Now, if the curve shift towards right hand side, right? If the curve shift towards right hand side or downside, right? So here in this case, you have to understand that they can sell these 1,000 units at what price, right? Here you can see I can add more values here. What they can do at 100 rupee, at $100 price, they can sell more units. This is going to be one scenario. This is going to be one scenario. So let's say at $100 price, they are able to sell now 2,000 units. Or there could be another scenario that what they are doing, they are able to sell 1,000 units, right? By keeping the price, let's say $80. By keeping the price $80. So why they are able to reduce the price here? Because they have the economies of scale, right? They can sell in the bulk, and that's why here in this case you can see that at the same price they are able to sell more units, right? They are able to sell more units, or at the reduced price they are able to sell the same units. That is what are economies of scale. Just let me know. Is it okay what I have discussed right now? Now there are various factors which will affect the economies of scale that we have to discuss. But let me know, is it clear what I have discussed till now?
So this rightward shift is when the economy is not doing well, right?
No, here you are talking about a different concept. You have to first understand that rightward shift will take place when the supplier is ready to supply the product at any price. Now you have to imagine that why the supplier will be ready to supply the product at any price. Just try to imagine, so you will be getting the more clarity.
Can you explain the graph, the one that you explained like few minutes back? That's simple.
You are talking about this graph, or you want me to explain the left hand side? No, I will come to this point, right? I have written the entire points.
No, no,
So
this graph only. This graph.
Acha, see, here, if I take the simple, I have not discussed the factors, what are the factors which will shift the demand curve towards the right hand side. Here, I've taken only one factor that, you know, uh, when the curve will shift towards the right hand side, right? So let's see when the curve will shift towards the right hand side. Here, this is going to be the situation when the supplier is ready to supply the additional units, right? When the supplier is ready to supply the additional units at whatever price, right? At whatever price, this is going to be the right-hand side movement of the graph. Now we can see the scenarios. We can see the scenarios here. So you will be getting more clarity. So this is the scenario of right-hand side shift, right? So from A to B, if they are shifting, so it means what they are doing, they are able to supply more units, right? They are able to supply more units. Similarly, if you will take the scenario of $10, so you will be able to see the same situation. Now, what I will do here, I will show you more examples. Just hold on. Vanshika, what I will do, I will discuss about the habit in coming time, right? So you will be getting more clarity. Just wait for 1 minute. I will show you more examples. There is confusion. Yeah. Now here you can see these are the factors, right? You can see these are the factors which will move the supply curve towards the right hand side, right? Now listen to me very carefully. So these are the factors given here. The first factor is given, that is decrease in the production cost. Same point we have discussed right now, right? Same point what we have done, we have discussed right now, right? If your production cost will reduce, what you will do, if there is a quantity demand, you will be able to supply excess quantity in the market, right? You will be able to supply the excess quantity in the market. So you can see when there is decrease in the production cost, lower raw material cost, reduced wages, or cheaper energy, make production more affordable. A drop in crude oil prices make gasoline production cheaper, increasing supply. So we have discussed here right now that if the any factor which reduces the cost of product, in that case you will find that the supply will increase. And if the supply will increase, right, sorry, if you will see here that if the supply will increase, so your graph will shift towards the right hand side, or we also call it as a downward shift, right? We also call it as a downward shift. So this is going to be the situation here, right? Same example I have taken. So I guess you are able to understand now, right? I guess you are stuck with the downward and upward movement. That's why you're not able to understand. Right now, what I'm trying to make you understand, kindly ignore the downward and upward movement assumption and just do the plain reading. So you will get the automatic understanding about this, right? This is the graph which I'm drawing. Then next is technological advancement. Now, what do you understand by term technological advancement? Now we know that everybody is using artificial intelligence, and soon you will find that robots will do the work of uh, human. So that can be considered as a technological advancement. So technological advancement will increase the speed of production, right? It will increase the efficiency and quality of production. So again, you have to understand here in this case, the supply will increase. Then government intensive incentive and policies. Right now, we have discussed that government is supporting to the EV vehicles. Government is also supporting to the solar products, right? So you have to understand if government is supporting, the supply will increase. Why? Because if the demand will increase, the supplier will try to supply as much as possible, right? So this is the another factor. Then increase in the number of suppliers. Now here we can take the best example of gadgets, electronic gadgets, right? So if you will see the example of phone, in last 1 decade, we have seen that various new companies, they came into the picture and they start selling the phones, right? So this is the reason why your supply curve will move towards the right hand side. Am I making sense here? Who was asking question? Rishu, I guess. Rishu, is it clear now? Reshu, is it okay now? Yeah, sure. Now we will see the leftward movement of supply curve. So here in this case, we can see the leftward movement. Now, when the leftward movement of supply curve will take place, listen to me very carefully. We will read the theory later on. First, I want that you should understand that when the leftward movement will take place. Here, this is the normal supply curve, right? Here you can see this is your normal supply curve. At $100, right? Here, the vendor is ready to supply how many units? Vendor is ready to supply 1,000 units, right? Now, let's say this curve move towards the upward side or left hand side, right? There is shift in the curve that is towards the upward side or left hand side. Yeah, so this is moving towards the upward side or left hand side. Now, here in this case, at same price, you can see that the supply is getting reduced. Right? You can see at same price, the supply is getting reduced. Now, what can be the reason why at same price, the supply is getting reduced? Here, you will be able to supply only 800 units. Or if the supply of 1,000 units is required, so the supplier wants the price of that is 1,200 units. So what can be the reason why this change will occur? You just let me know what is the reason why this change will occur. So vice versa situation will be there. If let's say there is increase in the cost of production, right? If there is increase in the cost of production. Now, I have taken the example of cigarettes, right? I guess you might be able to recall it. Government has increased the price of cigarette. Now, if government will increase the price of cigarette, don't you feel that the consumption of cigarette will reduce? Right? Don't you feel that the consumption of cigarette will reduce? If the consumption of cigarette will reduce, automatically the supply will also reduce. If there is no demand in the market, why the hell the manufacturer they will produce the product, right? So just think like this, that when the curve will move towards the left hand side, if the supply will reduce, if the demand will reduce, right? So there are various factors. Let's say increase in the cost of production. Then there are some government restrictions, right? Government is intentionally putting some restrictions. Right? Government is intentionally putting some restrictions. The another example is COVID example, right? There is impact on the supply chain. There is impact on the supply chain. What is the meaning of supply chain, right? Now, we have seen the war between Russia and Ukraine, right? We have seen the war between Russia and Ukraine. And Russia is the biggest supplier of mineral resources in India, right? Russia is the biggest supplier of mineral resources in India. You have to understand and you have to remember one thing, that Russia supplies the maximum mineral resources in India and other countries also. Now, here mineral resources includes the palm oil. It includes the palm oil. Where we use the palm oil, and there are various other types of oil which Russia supplies. Where we use the palm oil, right? Now I will give you the surprise. So whenever you eat cookies, right? Whenever you eat cookies or whenever you eat any kind of snacks, packed snacks or bread, right? So you can say you are consuming palm oil. You are consuming palm oil. So in India, uh, generally who uses the palm oil for the production of their products? Obviously FMCG companies, right? Ice cream, absolutely correct. Ice cream and mayonnaise. I guess you are able to relate with me. Ice cream and mayonnaise consist of 50% palm oil. Like mayonnaise also consists of palm oil. And palm oil is really very dangerous for the body. It's very dangerous for the body. Yeah, palmolive, absolutely. So you have to understand, right? You have to understand that is it palm oil or palmolive? What I remember, we say it as a palm oil. It may be palmolive. I might be pronouncing it wrong. Ajay, it is palmolive. Okay, okay. Hence the name. Okay, great. So in this case, you can see that, Russia is the biggest supplier of palm oil. And during the war between Russia and Ukraine, right, we have seen that the entire supply chain got affected. Supply chain got affected means that Russia was not able to supply the resources, right? And due to which, right, the FMCG companies, they were not able to manufacture the product. They were not able to manufacture the product. And this can be the another reason the supply will reduce. This can be the another reason the supply will reduce. So there are various factors, right? And if supply will reduce, the graph will move towards the left hand side, right? Graph will move towards the left hand side. So here in this case, we can see that, yeah. So leftward shift in the supply curve. Here you can see increase in the production cost, right? If you are increasing the production cost, it will lead to the left hand shift in the demand curves. People, they will consume less, right? If you will increase the price, so people, they will consume less. And if the consumption will reduce, so the supply will also reduce, production will also reduce. Higher cost of raw material, wages, energy make production expensive, reducing supply. Then natural disaster or supply chain disruption, right? So if any natural disaster occurs, you have to understand that if any natural disaster will occur, it will also leads to the reduction in uh, supply. Government regulation and taxes and bans. Then labor shortage is there, right? If there will be labor shortage, you have to bear the shortage in reduction, shortage in production, future price expectation. So I'm done from, I have done the discussion about the supply and demand curve, and I guess you understood. So you have any question? Do you have any question from the discussion which we have made till now? So you can let me know. So we can jump to the next discussion. I have to discuss about the superior, inferior, and necessity goods. I know I have to cover that also. So quickly, let me
Sir,
know. Is it clear?
sir, the terms we use when we say that upward shift and downward shift, right? So how does that relate to rightward and leftward shift?
Yeah, that's a great question, and it is quite confusing. So I will explain you here. When you draw the supply curve, so this is how the supply curve is drawn, right? So here, if I talk about the right shift, so right shift arrow will be shown like this, right? This is going to be the right shift. This is going to be the right shift here, right? So you can see that here, this is the right phase of arrow, right side of arrow. So here, if the graph will shift right hand side, right? If the graph will shift right hand side, so we will say that graph is moving towards or graph is shifting rightward side, right? Then if I draw the left arrow, so left arrow will be the this side, right? Left hand side is going to be the this side. So here in this case, when the graph will go left hand side, so we say that there is a shift in leftward side, right? We say that there is a shift in left hand side. So here you can see it is above the baseline. So we also call it as a upward shift or right shift. Upward shift or right shift. Right here, this is known as
So isn't that left?
left. My bad. It is left. Yes. So this is
Sir, and then in demand curve, when we do it, wouldn't the upward and downward get interchanged?
we can consider upward and downward. I will draw the demand curve also. So this is going to be the left shift, and here this is going to be downward. or rightward shift. Right, this is for the supply. Now, if I draw for the demand, so, oh, sorry, this is not the demand curve. Yeah, demand curve will start from the left-hand side. Yeah, and this is how the demand curve will look like. Now, here you can see that this is going to be the upward movement. This curve is above the demand curve, above the baseline. So, and the movement is towards right. Right here in this case, you can see the movement is towards right. Here, the movement is towards right. So here, the upward is going to be the rightward shift. Right, vice versa will be the scenario. Here, the upward is going to be the rightward shift. Right, upward is going to be the rightward shift, and downward is going to be the leftward shift. Right, so here you can see this is moving downside. So, and this is the left hand side movement. So we will call it as a uh, leftward movement or downward movement.
So one doubt, in case of supply curve, so if it is tending towards right, so it is means that the suppliers are more as compared to the consumers. So if they were selling one product at $10, let's say they are selling 100 units of it. Now the same units can be sold at $8.
Yeah,
Okay.
definitely.
So, is it necessary that the demand will increase, or it depends based upon the
See,
type of product they are selling?
first you have to understand that when the number of supplier will increase for the particular product, when there will be huge demand, right? When there will be huge demand, then you will find that the number of supply will increase. Now, if I take the best example of mobile phone, right? Now, in last 1 decade, we have seen that Oppo, Vivo, Xiaomi, a lot of companies they came into the picture because they were knowing that there will be significant increase in the demand of cell phone, right? Because we have adopted the technology uh, in deep extent in last 1 decade, right? So everybody is having phone nowadays. So that's why a lot of competitors or suppliers they have started manufacturing the phone. Similarly, if I take the example of petrol pumps, right? Now, if you will see that the demand for petrol pump has reduced, right? Just because after the introduction of EV vehicle, nowadays there are very few people who opens the petrol pump. Why? Because you won't be able to make the that much profit, right? So even though my uncle he has started petrol pump last year itself, and he's not earning that much profit what he has expected, right? So if somebody has started the petrol pump, let's say 10 years back or 20 years back, they were making 5 times, 10 times extra profit as compared to the current scenario. Why? Because you have to understand people they have moved towards the EV vehicle. Now, a lot of players they came into the picture in case of EV vehicle. Now, you can see that Ola is also manufacturing EV vehicle, and there are a few new companies who have started manufacturing EV vehicle. So, why they have entered into the EV segment? Because there is a huge demand, right? So, they will be able to produce and sell more units. So, you have to understand that when the supply increases, then the number of supplier increases, right? There's a direct relationship between the more suppliers, more supply. Is it clear?
Yeah, thank you, sir.
Yeah. So this is the situation where more supply will be there, reduction in cost can take place, then that's why your supply will increase. So these are the scenarios, right? Government support, these are the scenarios. So entire things are given in the PPT. If you will read, you will get more clarity. So we can proceed ahead and we can discuss more. So I guess you understood. See here, examples are given. You can read it, so you will be getting more clarity. Hmm. So everything is given in this PPT. You can read it. Now I would like to discuss about the market equilibrium. Right. This is the next concept which we have to discuss, and it is a short and sweet concept. So we can read this quickly. What is market equilibrium? Now we have to understand. We have already understood. I will only draw the diagram, and you will be able to understand automatically what is market equilibrium. So when we combine the both demand and supply curve, right? So that gives us the market equilibrium. So here I will draw the demand curve and supply curve. So this is the supply curve and this is the demand curve, right? When the demand and supply curve, it intersects, right? When the demand and supply curve, absolutely correct, Arishwar. When the demand, so please explain expansion and contraction too. I will come to this point, expansion and contraction too. So you are specifically talking about the expansion and contraction of this demand and supply, right? Yeah. So you have to understand this is the supply curve. This is the supply curve, right? And this is the demand curve. Now let's write down the units. So you will be getting more clarity. So here I will write down the units. So this is 1000 units, right? Here is 2000 units. Here I will write down 3000 units, 4000 and 5000 units. Right now here we can write down the price. So if you are selling your product at, let's say, $100, right? So you are able to sell how many units? You are able to sell here. There's a demand, sorry, there's a demand of 1000 units, right? There's a demand of 1000 units. But here in this scenario, you can see that what will be the supply? The vendor is willing to supply 1000 units only, right? The vendor is willing to supply 1000 units. So this is for the supply and this is for the demand. Oh, here we should intersect. So here, let's say this is intersecting with this point. So this is for the demand, right? Further, we can see that the next scenario. So at 2000 units here, so when you have reduced the price, right? Let's say the price is now uh, $80, right? Here, there was an demand of how many units? There was a demand of 2000 units, right? So this is for the D. And here, there is a supply of how much? There is a supply of how many units here? There is a supply of 2000 units, right? And further, what you have done, you have reduced the price. Further, what you have done, you have reduced the price here. So when we have brought the price to, let's say, $50, right? Let's say we have brought the price to $50 or $60, let's say. So here, this point will intersect, right? And here, the supply and demand is same in both the cases, right? So if we are keeping the price, that is $60. If you are keeping the price, that is $60. So what supplier is ready to do here? Supplier is ready to supply how many units? Supply is ready to supply 3000 units, and there is an demand of how many units? There is a demand of 3000 units. So you have to understand when the supply and demand curve intersects. You have to understand when the supply and demand curve intersects, right? So here that is going to be the equilibrium point, right? That is going to be the equilibrium price, right? Here in this case, you can say that this is going to be the best price. This is going to be the best price at which the demand and supply will be equal, right? At which demand and supply will be equal. I guess I'm making sense here, right? Here the demand and supply is going to be the equal, and here the maximum profit can be made. Right here, the maximum profit can be made. We will discuss about the maximum profit in coming time. But here, the supplier will sell the product at $60 and supplier will be able to sell you 3000 units. Now, if supplier is selling product at what price? If supplier is selling product at $100, how many units supplier will be able to sell? Supplier will be able to sell you only 1000 units, right? Supplier will be able to sell you how many units? It is going to be 1000 units. But if supplier is selling. So what is going to be the sales of supplier in this case, right? What is going to be the sale if the supplier is selling product at $100 and the only 1000 customers are there who are ready to buy your product. So your sales is going to be how much in this case? In this scenario, your sales is going to be 1000 units, right? Let's say this is A, and here I will write down A. right? So you can see further, it is going to be 1,000 units multiplied with $100, right? So that is going to be how much here? That is going to be $100,000, right? $100,000. Then, if I take the B scenario, so in this case, what is going to be your sales in B scenario? So here in this case, your sales is going to be, that is 2,000 units multiplied with $80 sale. So that is going to be how much here? That is going to be 120,000. No, it is going to be $160,000 sales, right? So in this case, it is going to be 160,000. But if you are selling your product at what price? If you are selling your product at $60, right? And here in this case, you can see what is going to be your sales. Here your sales is going to be 3,000. So this is the point where both the supplier and buyer, they are ready to pay, or they are ready to, exchange the product at $60. So this is going to be a uh, 3,000 units into $60. That is going to be how much here? That is going to be $180,000. Right? That is going to be $180,000. Now, further, if you reduce the numbers here, so you can see, if we are selling product at what price? If we are selling our product at $40, right? So here in this case, you can see that this point will intersect, right? So there will be demand of how many units? There will be demand of only 4,000 units, right? Here in this situation, you can see there will be demand of only 4,000 units. So this is the D point. So what is going to be your total sales here in this case, right? In case of D point. In case of D point, your total sales will be how much? Here sales is going to be 4,000 into $40. That is going to be $160,000. So you can see where you will be able to achieve the maximum sales. You will be able to achieve the maximum sales at the equilibrium price. Right? At the equilibrium price, your sales will be maximum. Like, I guess you understood. So we can see further, if demand curve move towards the right hand side, so the intersection of supply and demand curve also changes, the producer will find. Absolutely, absolutely. See, wherever the demand curve will move, right, the equilibrium point will also change. Right? The equilibrium point will change. So we will discuss that point also, right? That if the demand curve or supply curve will change, so how the equilibrium effect will also change. We will discuss this. Right now, I want to keep it simple. So you have to understand equilibrium occurs where the demand and supply meet, quantity demand is equivalent to the supply. At this price, there is no shortage or surplus. So you have to understand at this price, there will be no shortage and surplus. So you have to understand the area above the, here in this scenario, you have to understand area above, yeah, area above the intersection point, right? Area above the intersection point is going to be considered as a surplus, right? Is going to be considered as a surplus, right? So this is the area which is going to be considered as a surplus, right? An area below the intersection point, this is going to be the deficit or shortage. So in this case, what they are doing, saying that there is, at this price, there is no shortage or surplus, right? Here, at this price, there will be no shortage or surplus. What does it mean here? Right? Just listen to me very carefully. So you will be getting more clarity. So this is surplus zone, right? This is the surplus zone. And here, this is the shortage zone. This is the shortage zone. Now, why area above the intersection point is the surplus zone? Why this is the surplus zone? Now, let's say if you kept the price, right? If you kept the price, that is $100, right? If you kept the price, that is $100. Now, you know that equilibrium units are given 3,000 units, right? Here, you know that equilibrium units are 3,000 units. Now, if you have calculated that equilibrium units are 3,000 units, and accordingly, what you have done the production. Accordingly, what you have done, you have done the production, right? Accordingly, what you have done, there is a concept of elasticity of supply, and the same formula will be applicable. We will come to this point. However, that's a great question. There is a concept of elasticity of supply. Yeah, there is a concept, and we will see, right? So here in this case, you can see what is equilibrium units here. The equilibrium units is 3,000 units, right? Equilibrium units is here 3,000 units. Now you tell me if you want to sell, an equilibrium price is how much here? Equilibrium price is $60. So here, if you will sell your product at $60, right? Then you will be able to sell your entire units. So you have produced your 3,000 units, and if you will sell your product at $60, if you will sell your product at $60, then you will be able to sell the entire 3,000 units. Now, what you have to do, you have to remember and understand one thing, that if you want to sell your product, right, let's say at $100, if you want to sell your product at, let's say, $100. So what is going to be the problem here in this case? Here, you will be able to sell only how many units? You will be able to sell only 1,000 units. Why? Because at $100, you will find that there will be demand of only 1,000 units. So you have to understand, out of 3,000 units, you will be able to sell only 1,000 units. So there will be surplus units with you, right? There will be surplus units with you, which you won't be able to sell. So that is going to be your 2,000 units. I guess you're able to understand. That is going to be a 2,000 units. So here, if you will sell the product at $80,
But
you
sir,
will be able to sell only.
if
Any
I'm
question?
willing to sell for, let's say, $100, then I'll be willing to supply only 1,000 units, right, at $100, or would
Yeah.
it be right?
No, obviously, you will be willing to supply only 1,000 units. Yeah, that is absolutely correct.
Because but the thing is, at if I want to supply 1,000 units, the intersection is at a lower price though. Like,
You're talking about this, right? Now,
yeah,
see,
yeah. But
you will be willing to supply 1,000 units. Now, that is absolutely correct. You have said. Huh.
but then according to graph, it's like I'll be willing to pay, like, take or supply it for lesser amount too, according to the graph. The thing that you underlined right now, line.
No, I'm not. Can you please say it again? What you're saying?
You see, for $100, I'll be willing to supply 1,000 units. That is ideally
No,
what it should be.
no. Supply graph will start from this point, right? From left to right. Here, if you see supply graph will move
Mm.
this side. So here,
But how much
if
am I select? Huh.
here it is going to be $20, right? So at $20, what you can do, you can supply 1,000 units, right? At $20, what you can do, you can supply 1,000 units. But here, what you are doing, you are willing to sell this at $100. Now, if you are willing to sell this at $100, so consumer is not ready to buy, right? Consumer is not ready to buy. Consumer is, there are 1,000 consumers who are willing to buy this product, right? So we can take an example. Let's say you are the supplier of, we can say earbuds, right? You manufacture and sell the earbuds, right? Now in market, the earbud price, general earbud price, which is available is, let's say, $50, right? Which is $50. There are vendors who are ready to sell these similar kind of earbuds at $50, right? But you are not ready to sell those earbuds at $50. Now, if I take the example of, let's say, Boat. So Boat has the advantage, or any company, Philips or whatever you want to take, Boat, Noise, they have the advantage of economies of scale, right? They have the advantage of economies of scale, right? So what they can do, they can sell their product at cheaper price as compared to you, right? They can sell their product at cheaper price as compared to you. But if I take the example of, let's say, you have started a manufacturing company where you have started manufacturing the earbuds. Now your economies of scale is going to be comparatively high because you won't be able to produce and sell initially the much units. But what you are doing, you are trying to recover your entire cost of production. Your cost of production is how much here? Your cost of production is, let's say, $100, and you want to sell this product at $100. So now you have to understand that here you won't be finding out much customers who will be willing to buy your product because they have substitute, right? But still, with the help of marketing and other costs, somehow you are able to get some customers, right? Somehow you are able to get some customers. So here, if you will see, your graph starts from this, and here there are suppliers who are ready to supply the product at $20, right? So here the supply of 1,000 units is taking place at $20. But if you will supply this at $100, so there will be demand of only 1,000 units in the market. Right? There will be demand of 1,000 units only in the market. So you won't be able to sell the much units. Is it clear what I said right now?
That's why. That, yeah, that is clear. But my question still is like, if I'm selling it for let's say $100, then according to the graph of supply, if you connect the $100 to the supply graph, it comes to
Hmm.
5,000 units. Then
Hmm. No, you are saying it comes to the no. This is going to be the if you will reduce the price of product to $20, right? So this demand graph, if I connect, let's say, if I intersect this graph, right? You are saying if I intersect this point with the 5,000. Huh, so the same thing you can see now. If you will sell your product at $20, so there will be demand of 5,000 units, right? There will be demand of 5,000 units. But in that case, the supplier will be willing to supply only 1,000 units. Huh. So still, I'm not able to understand
understand,
what you're asking. Is it
understand.
clear?
Yeah, it is somehow somewhat clear, but the thing is like the thing that you said about my earphones cannot be incorporated in this graph, no? Because the
No,
thing is, if I'm supplying it $100, then I have to, my demand should be in proportion to like 1,000 to 1,000, right? So my demand should be 5,000 only. Sorry, supply should be 5,000 at $100, because that's where my supply graph is intersecting for that much units. In the end, like the, if you connect the $100 to the 5,000 graph, so it is on the top of the supply graph, right? So that much only have to supply at $100. But let's say like Apple, who is selling it for premium price, he is still selling for $100 one iPhone, not 5,000
uh,
iPhones, right?
so what I understood, you are saying that if I connect this graph here, right? So here at $100, right, the supply will be 5,000 units. Is it clear? At $100,
Yes,
the same.
yes.
I have taken the vice versa situation. Chalo, I am taking your situation, right? Here, the supplier is ready to supply 5,000 units. So I have not considered this 5,000 units. I have taken, constant value here. Let's say you have produced 3,000 units, right? Let's say you have produced 3,000 units. That's why I have written here this separately. That if you have produced 3,000 units, considering the equilibrium point. Now, if you are willing to sell this product at $100, right? So you won't be able to sell these entire units. This is what I have assumed it, right? So here, if you will sell the product at $100, right? You will sell the product at $100. Customer won't be buying, the product at $100. You are ready to sell 5,000 units. This is the different scenario you're saying. We can consider this. Yeah. Here, if you, what is the supply curve is saying here? Supply curve is saying that if you will sell your product at $100, right? So the supplier, let's say you are the supplier, you are getting highest price here, right? You're getting highest price. So what you will do here in this situation, you will try to sell out your entire stock. Let's say you have the stock of 5,000 units. So you will try to sell out your entire stock, right? But here in this case, you can see that the customer will buy only 1,000 units from you, right? So you have the stock of 5,000 units, right? You have the stock of 5,000 units, but you will be able to sell how many units here? You will be able to sell here only 1,000 units. So still here in this situation, you can see that you will be having surplus units with you, right? You will be having surplus unit. This is what you're trying to say?
So basically, let's say you are an iPhone supplier, and there will be only like 1,000 people who will be willing to buy your iPhone for $100, right? And let's say like, if you reduce your price, then a lot of people might be willing to buy 5,000, 4,000 units as well,
Absolutely
right?
correct.
That's
Absolutely
what
correct. Yeah.
it
So, yeah, if you will
understood.
bring your
Okay,
price
thank you
to
so
$60, then this is the equilibrium price where you can sell the equilibrium. So that's why you know what the business do. They try to find out the equilibrium price and equilibrium because this is going to be the most profitable situation. So I was trying to make you understand the surplus, right?
so
What is the surplus for? Yeah, yeah, please say.
at $60, like, so at $60 is beneficial for both basically. Like there are equal number of people who are willing to buy also and people to sell.
Absolutely correct.
Thank
So
you so
this is the
much.
point, where you will get the maximum customers, right? And you will make the maximum profit. That's why here, if you see, so I've written the sales at each point. If you will sell your product at $100, your sales will be $100,000. If you will sell your product at $80, so you will be able to sell 2,000 units and your sales will be $160,000. If you are selling at equilibrium point, it is going to be 3,000 units into 60, that is going to be $180,000. If you are selling 4,000 units, right, at $40, your sales will be only $160,000. So this is the best point. So I guess you understood what is surplus, right? So surplus means that you have produced 3,000 units, but you are very rigid. You are saying that no, 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 I will sell my product at $100 only. So you won't be able to sell the entire units, right? So here some units will remain. And vice versa will be the situation of shortage. Right?
Sir,
So
sorry, 1 second. So it means whatever the calculation you are telling, I am as a manufacturer, I will manufacture the equilibrium quantity. If I am selling less, it's my surplus, right?
absolutely, it is going to be surplus, which will
Okay.
remain.
So as a man, it assumes that I manufacture at equilibrium quantity.
Absolutely. Or here,
Okay.
if you want to compare like this, so at $100, you can see that you are willing to supply 5,000 units. Right? There's alternative way to understand this. You are willing to supply how many units? So this point, if I intersect, right? So here, it will be connected with these 5,000 units. It means you are willing to supply 5,000 units, right? But there are only 1,000 customers who are ready to buy a product. So you have 5,000 units, but you will be able to sell only how many units? You will be able to sell only 1,000 units.
Correct.
Yeah. Sure. So I guess you understood. Now we can see more, so you will be getting more clarity. So here there's a formula given how you can find out the equilibrium price and quantity. So we can solve this question, so you will be getting more clarity about this. So market equilibrium is given. There is question, right? Demand function is given to us. That is QD is equal to 500 minus 5P, and the supply function is given here. That is 100 plus 3P. Right? This is the demand and supply function given to us. So what we can do, we can create an equation. Now at equilibrium point, right, my demand function and supply function will be equivalent. Yes or no? At equilibrium point, my demand function and supply function will be equivalent, right? So here, if I want to find out the equilibrium price and quantity, so I can create an equation where 500 minus 5P, which is the demand function, will be equivalent to the 100 plus 3P. Right, which is going to be equivalent to the 100 plus 3p. So is it possible for us to solve this? What is going to be the answer? Shargan has given very quick answer. Both curves are interrelated. Absolutely correct. Shargan has written the supplier can supply 5,000 units at $100, but there will be demand of only 100 units, 1,000 units. There is a surplus supply and more than absolutely. That was for the surplus. That was for the surplus. Uh, why I'm getting different answers here. Somebody saying 50 and 250, 50 and 250, and Javan and Vikas, they are saying different point. Let's see. So here, if I want to find out the quantity, so I will solve this. So this will become 500 minus. This is going to be 400 plus 8p, right? 400 plus 8p. So that is going to be a p is equivalent to 400 divided by 8. Where the sheet has gone. So here, this is going to be 400 divided by 8. Obviously, it is going to be 50. So here, p is going to be 50. Right here, p is going to be 50. Right? So this is going to be 50 in this case. Now, once you have calculated the p, now what you can do, you can put the value of p anywhere, right? So you can put the value of p here. Okay, you can put the value of p. So we have calculated that the price is going to be $50. So equilibrium price is here $50. That is $50. Then you can put the value of p in any equation. So quantity demand and quantity supply will be same. So 500 minus 5 into 50 if I do. So that is going to be a 250. So the quantity demand is going to be 250 and the Sorry, equilibrium price is going to be how much? It is going to be 50. Right? So quantity demand is 250 and equilibrium price is 250. Am I making sense here, guys? What we have discussed right now? Just let me know. Yeah, great. So can we move towards the next discussion? Yeah, we can jump to the towards the next discussion. Now, I would like to give you 2 points as a homework. You just give a try to this. In next lecture, definitely I will discuss, right? So stable equilibrium in economics. This is homework for you. Give a try. It is very easy, right? And unstable equilibrium. This is homework. Here, all the examples are given, right? So once you will read, automatically you will get the idea. So I do not want to discuss right now. I will discuss this in next lecture, right? So kindly read it. So you will be getting more clarity. Now, consumer surplus, I will discuss this in next lecture. It will be taking time. I would like to discuss about the elasticity more, right? So these points, there are a few points which I won't be able to discuss it today. Deadweight loss that I will discuss in next lecture, right? So I will take the relatable concept here. I will try to take the relatable concept. So elasticity, right? So we have already discussed in detail about the elasticity, right? We have discussed about the price elasticity. So there was an concept that was necessity and luxury goods that I will discuss, right? So because that point is remaining. So we have how much time remaining? We have 10 minutes remaining, 10-15 minutes. So we can do this. I know that it is very difficult to sit for 4 hours, but thanks a lot for, participating. So we can stretch this session by 2-3 minutes, not more than that. Here in this case, you can see we have already discussed about the price elasticity. So we have seen that if the elasticity is going to be greater than one, right? If it is going to be greater than one, we will consider it as a relative elastic demand. If it is less than one, it is going to be relatively inelastic demand, right? Then if it is equal to the one, unitary elastic demand. Then if it is infinity, it is going to be perfectly inelastic and perfectly elastic. And if it is zero, it is perfectly inelastic. We have done this in detail, right? Now, here you can see the examples, right? We can see here the examples, so you will be getting more clarity. But you know what I have to do? Mostly I have to focus on the income elasticity. That is the another important concept which we have to discuss, right? So here you can see that they have given the example. They have given the example. Elasticity demand example is given, right? So in case of luxurious goods, you will find that the change in price will lead to increase in demand more, right? So a price of high-end smartphone drops from 1,000 to $800. Now, if you will see the festive season, during festive season, what they do, they intentionally reduce the price because in India or in entire globe, I guess, during festive season, what the people do, they buy a lot of products. For entire year, they wait that, when company will give 5%, 10% discount, then we will buy the product. So in case of luxurious goods, you will find that the demand will be elastic. So here you can see the price reduced by 20%, the demand increased by 50%. So 50% divided by 20% if I do, so that is going to be a 2.5 times, right? So this is about the luxury goods. This is about the luxury goods here given, right? Then you can see if insulin prices. Now they are talking about the necessity, right? If you can see here the necessity, even though the price of, let's say, sugar insulin, right? Sugar insulin. So when you suffer from diabetes, heavy diabetes, so you require the insulin on daily basis. Insulin is the kind of injection which you will consume to maintain your sugar level or diabetes level. So here in this case, even though if the product price increases by 20%, right, there will be fall by 2% in the demand. So it is going to be the inelastic demand because it is necessity, right? It is necessity. And in case of unitary elastic, that is the balanced demand, right? So clothing brand. So in case of clothing brand, you won't find much changes. So they have given you the example that if the price is raised by 10%, right, you will see that the closing consumption will reduce by 10%. So this is going to be the balance demand, that is 10% divided by 10, it is going to be the unitary elastic. This we have already discussed, right? Now, what I want to do here, I want to discuss the other point. I want to discuss here the other point, that is the income elasticity, right? We have to discuss about the income elasticity. Unit elasticity. This is the curve you can see for the relative elasticity or unit elasticity, right? So in case of unit elasticity, how the curve will look, there will be no change, right? So there will be equal change. So in case of unit elasticity, the curve will look like this. I can show you. I've written everywhere. Here, there will be gap of same percentage, right? So let's say here, the company is able to sell 100 units, right, at $10. 100 units at $10. If the price reduced by $1, right? So there is 10% reduction. So here there will be same gap. Here there will be same gap. So it is going to be the 45-degree, you can say, curve. Right? This is how it will look like, and this is going to be the curve here. Yeah. So we can see a lot. We can see other concepts here. Now I would like to discuss about the income elasticity, right? Now, what is the meaning of income elasticity? Here you will get the more clarity about, because the question number third we have done that was related to the income, right? So you will get more clarity about this concept, right? Once you will read the income elasticity. Now, if I talk about the income elasticity, now you have to understand that if your income will increase, right? If your income will increase. So how come income will be affecting the demand of various products? Is it possible for us to find out that how come income will be affecting the demand of various kinds of products, right? Now, if I take the example of various types of products, so we consume the luxury products, right? We consume the luxury products, right? So luxury products may include here the, let's say, high brand mobile phone, watches, right? Cars, etc. Then here, second product is going to be the necessity products, right? So necessity products, you can say medicines, right? Medicines. Then we can say the normal products, right? We can say here the normal products. So normal products will be your, let's say, clothing. Normal products we can consider, that is going to be the clothing here, right? Not clothing, it is going to be the clothing stuff. So here we will include the clothing, right? And if I talk about the next product, that is going to be the inferior product. That is going to be the inferior product. Now, what can be the inferior product? Inferior product, you can say that, when your income was not up to the certain extent, so you used to purchase the unbranded clothes, right? Local street clothes you used to purchase, right? Unbranded clothes you used to purchase, right? Now, here in this scenario, you have to understand that now, once your income will increase, right? Once your income will increase, don't you feel that instead of using the unbranded clothes, you will move towards the luxury products? You will move towards the luxury products, right? You will start consuming the normal products, right? You will start consuming the normal products. So you have to understand one thing, that whenever your income will increase, right? You have to understand that whenever your income will increase, right? There will be decline in the consumption of inferior products. There will be decline in the consumption of inferior products, right? Here you can see whenever income will increase, normal product consumption will increase, right? Luxury product consumption will increase, and there will be slight change or no change in the necessity product. There will be slight change, or you can say no change in the necessity product. See, if your income will increase, you won't be consuming, 10 tablets in a day. If doctor has advised you that you have to consume diabetes tablet once in a day, so you won't start consuming the 10 tablets in a day. So you have to understand that inferior goods consumption will reduce. If you will start earning more, so you will focus on, buying the luxury products or normal products rather than the inferior products. Now you have to understand what is the formula for the calculation of income elasticity of demand. So formula is very simple. We have already discussed. We have to take here the percentage change in quantity divided by percentage change in the income, right? Divided by percentage change in the income. Now, if your income is increasing, let's say your income is increasing from $100 to $200, right? Your income is increasing from, let's say, $100 to $150. So you have to understand that this is going to be a positive change. Your income has increased, right? So this is going to be the plus price, right, or plus increase. Similarly, the consumption of luxury product will also increase. The consumption of luxury product will also increase. So let's say previously the quantity consumption was of 100 units. Now here the quantity consumption is of 200 units. It is also going to be positive, right? Here in both the situation, both both income and quantity is increasing. So in case of luxury products, you have to remember, right, that your elasticity will be positive. Your elasticity will be positive. You won't get the negative answer, right? You won't get the negative answer. Same goes with the normal same goes with the normal goods, right? Here, when your income will increase, right? So there could be a chance that normal goods consumption may also increase. So previously, the company was able to sell 100 units. Now, company will be able to sell here, let's say 120 units, right? Let's say company will be able to sell here 120 units. So here in this case, you have to understand that here there will be increase. So it is also going to be positive because in both the situation you can see that the income increases, the luxury and normal product increases. But if I talk about the inferior goods, you will find that the consumption of inferior goods will reduce. So previously company was able to sell 100 units. Now here in this case, company will be able to sell how many units? Company will be able to sell only 70 units, right? So here the elasticity is going to be negative. Here the elasticity is going to be negative. Hopefully you are able to understand, right? Definitely. Definitely. Yeah. So we can see the example and we can try to understand more about this. So here they have given you the explanation about the inferior and normal goods. You can read it, right? You can read it. I am giving you this as a homework. Once you will read, you will get the clear difference between inferior goods and normal goods. So I've already discussed about the normal goods. So let's say what you're doing, you are buying branded goods, branded clothes. So that can be the part of normal goods, right? Instead of buying unbranded clothes, what you have done, you have started buying the branded goods, right? So branded clothes is going to be considered as a normal goods, right? But there is a difference between normal goods and luxurious goods. Luxurious goods means you are buying high-end product, right? You are buying high-end product. That is going to be the luxurious goods, right? So here in this case, you can see the entire explanation about the situation is given, right? So you can see that in case of increase in income, right? In case of increase in income. So let's say if the income has increased from $100 to $150, right? Income has increased from $100 to $150. So you have to understand in case of luxury goods, right? If I talk about the luxury goods or in case of, let's say first, normal goods. So you have to understand that the normal goods consumption will also increase. So previously company was able to sell 100 units, right? Now let's say company will be able to sell here more than 100 units, right? So let's say company will be able to sell 130 units, or there could be a chance company may be able to sell more units. It can be 200 units. So in this case, your answer is going to be positive. So you can see that in case of normal goods, right? In case of normal goods, the elasticity is going to be greater than zero. Elasticity is going to be greater than zero. So you can see demand increases as income increases. So here in this case, you can see the quantity demand increases by 30%, right? And here in this case, the income increases by 50%. So what is going to be the elasticity in this case? So quantity changes of here how much? Quantity changes of here 30%, right? Quantity changes of here 30%. And here in this case, we can see that the price changes of 50%, right? The price changes of 50%. So here you can see it is going to be 30% divided by 50%, and this is going to be a 0.60, right? Now here you have to understand, we won't use the word elastic in this situation, inelastic, right? Here it is going to be greater than zero. This is what you have to do, you have to write it down. It is going to be greater than zero because you can see that if your income is increasing, right? Here both the values are positive. So if your income is increasing parallelly, your quantity demand is also increasing, right? So we can say that both the values are changing. Both the values are changing. So we will consider it as the greater than zero. In case of normal goods, the elasticity is going to be greater than zero. It is going to be greater than zero. It can be greater than one also, right? In case of inferior goods here. Now here you can see that your income has increased from $100 to $150, right? So your income has increased by 50%. Now, if I talk about the inferior goods, the consumption of inferior goods has decreased. So previously, there was consumption of 100 units. Now, it reached to the 70 units. So you can see there is a decline of 30%. There is a decline of 30% here in this case, right? So I will calculate this here. So this is going to be the change in quantity, which is 30%, right? And divided by, you can see that is 50%. You will get here the negative answer because both the demand and price will be sharing the demand and income will be sharing the negative relation, inverse relation. So in this case, it is going to be 0.60. So in case of inferior goods, it will be negative. I guess you are able to understand. Right? In case of inferior goods, it is negative and always it is going to be less than zero. Always it is going to be less than zero. So in this case, we got here 0.6. Right? It is going to be less than zero. That is here 0.6. Right? Same if I talk about the luxury goods, it is going to be the greater than 1. It is going to be the greater than 1. Greater than 1 means here that the luxury goods consumption will be very elastic, right? It is going to be very elastic. So let's say if your income increases, right, from $100 to $150, immediately what you will do, you will give the order for iPhone. Now, iPhone can be categorized as the luxurious goods, right? So previously, company was able to sell, let's say, 100 units. Now, just because the increase in income, the consumption of iPhone has increased, it has reached to, let's say, 200 units, right? It has reached, let's say, 200 units. So here in this case, there is 100% increase in the quantity. And here you can see that there is only 50% increase. So here in this scenario, 100% divided by 50% if I do. So that is going to be a 2 times, right? So it is going to be elastic. It is going to be elastic. And same, you can see that a lot of examples are given, right? You can see that same, a lot of examples are given. And necessity. So necessity is going to be less than 1 always. Why it is going to be less than 1 always? So the best example is medicine, right? So if your income will increase by 10%, right? You won't start consuming the 10 medicines in a day. The medicine consumption will remain same, or there could be a chance you may purchase good quality medicine, right? So there will be a slight change. So here in this case, you have to understand that the quantity change will be positive, but it is going to be comparatively less as compared to the income, right? Here they have given the example of milk. If you will start earning, let's say, double of your salary as compared to the previous year, so you won't start consuming double milk. So here in this case, it is going to be 2% divided by 10%. So the elasticity is going to be 0.28. The elasticity is going to be 0.2. Is it clear what I said right now? So I guess we have discussed enough. So what I will do, I will upload this PPT and there are a lot of examples given, right? So here you can see that real world examples are also given. So I will suggest you that go and read this, right? So you will be getting more clarity, right? So just let me know if you have any question from the discussion which we have made. So I will take your questions. Otherwise, we will end
Sir,
up the
I have one question. Can you open that market equilibrium page, please? The
yeah,
graph.
please. Just give me 1 minute. Yeah.
So, sir, what? Sorry if I'm troubling you. So here the market equilibrium is at $60 for the 3,000 quantity. So I want to understand like what is the shortage and surplus. So it means that $100 I will be able to. I mean the demand is for $100. The demand is 1,000 units, right?
Yeah.
So what is the surplus of 2,000 units and shortage? Can you brief me, please?
Acha, see, surplus means here that I will take simple example, right? Let's say you have 5,000 shares with you, right? You have 5,000 shares with you. Now this practically occurs, right? So let's say you have 5,000 shares with you and you have purchased these shares, let's say at $95, right? You are the trader, and you have purchased these shares at, let's say, $95. Right? You have purchased
Okay.
these shares at $95. Right? Now you want to sell these shares at $100 minimum price. You want to make the profit of $5 here in this case. Right? Now you have the 5,000 shares, but now the decline in the demand, because of the decline in the demand, nobody is ready to buy these shares from you at $100, right? Nobody is ready to buy these shares at $100 from you. If you want to sell the shares at $100, so there are 1,000 buyers. There are 1,000 buyers, right, who can buy these 100 shares. Or there's a buyer who is willing to buy 1,000 shares at $100. But remaining 4,000 shares, you won't be able to sell, right? Because you are not getting a customer who can buy these shares from you, right?
Correct.
Yeah.
So it means that I am having market equilibrium quantity of 3,000, but at the $100 rate, only 1,000 is a demand, and the 2,000 is my surplus.
Absolutely, absolutely. So you have
And
to
at,
wait for a longer period if you want to sell these shares.
and vice versa for the shortage.
Absolutely correct. Absolutely correct. Yeah, absolutely correct.
Thank you.
So, yeah, yeah, absolutely. I have received few questions. I will quickly answer those questions. The class will end now. I thought it is 11:30 Indian time and 1 p.m. No, no, no. See, we have started at 9 as per the Indian timing, and we are closing at 1 as per the Indian timing. So as per the UAE timing, it is 11:30. Yeah, I guess it is 11:30 in UAE. So I have question regarding the course. We will finish these subjects, right? First economics, then you will jump to the next subject. This is what I know, but still you can confirm from your uh, co- uh, coordinator. So from where we can check the sequence in which we will study each subject of CFA level 1. If you will go to the LMS now, there the entire sequence is given. In LMS, when you will choose your subject now course, their entire sequence is given. That first you have to learn the economics, then you have to learn the quants, then you have to learn the FSA. Entire sequence is given. So can you show how to get the access of recorded video? That I will show you. Just hold on for 1 minute. Just let me share the file. So here you can see this is the sequence of course. Somebody has asked me that where is the sequence of course? This is the sequence of course you can see. Right. So this is the sequence. So we have started with economics, right? So here, let's say if you want the recording of previous lecture, right? So what you have to do, you have to click on the first tab, right? You have to click on the economics. Now in economics, you will be able to see the first lecture. So once you will click on the first lecture, right? So here, you will be able to see the recording, right? So here you can see this is the entire recording available, right? This is the entire recording available. I guess you're able to understand, right? Yeah.
Sir, but I don't see this interface when I'm trying to log in, where I can get the
Yeah,
attachments
same
as
with
well.
me, sir.
I do get to see the
You're not able to
recording,
see the interface?
but I don't. So the same interface, this exact interface, right? When,
That's fine.
like
You are
when I am logging in. Uh, Abhi, what you're
okay.
showing that is visible. What I'm trying to say is that when I log in, I don't see this interface. I can access the
Okay.
Same,
recording, but I
same.
don't get to see the.
I
Uh,
think that the admin interface is different from ours.
Uh, that could be the
yes,
reason.
so
This is not an
that's why.
admin. What I will do, I will talk
Okay.
to the Ayush, and you can talk to your coordinators. So they will update you. But for sure, once I will finish this session, I will talk to the coordinator and I will ask them to connect with you, and they will provide you the guidance that how you can get or fetch the recording. Definitely,
So,
after this session, immediately I will write on the message.
can you open
Uh,
that sequence, or at least for timing, I'll take a snapshot of it.
yeah, I will look.
To access your videos, all you can do is just go on calendar and click on that particular date which you want to see the video. And
Uh,
once you open, you'll see play. So just you need to hit play. That's it.
then you can follow this instruction. And even though I will ask, moderator to connect with you and they
So,
can guide you. So
so for the videos, it's fine. For the attachments like the Excel file, the PPT, that is what something which is missing.
no, I will talk. No,
Uh,
everything I have uploaded. So I will talk to them and definitely they will guide you. Right. There will be another way
fine,
to
sir.
fetch the content. So you can also write down a message to them, and also I also write down a message from my side to them.
Sure,
Yeah.
sure. Thank
So
you.
you will get the solution for
Ayan,
this.
if you want to see
Yes.
the attachments, right? You
Mm-hmm.
just go on dashboard, okay?
Okay.
Dashboard, then you'll see content. So just click on content. There you will see two options, okay? That is CFA L1 free to live learning. Once you click on that, on the right hand side, you will see syllabus, okay? And you will
Okay.
see orientation and demand and supply pre-learning. There you'll see live, then dot and attachments. Just need to click on attachments.
Fine. Okay. I'll try this then.
Yeah,
Thanks. Mhm.
yeah.
Sure. So thank you so much, guys. We will connect in next lecture and we will do more discussion. Once I will close this session, I will upload the today's PPT and entire content. So thank you so much for joining, and hopefully you understood what we have discussed in today's session. We will discuss more, right? So you will be getting more clarity. Yeah. Thank
Thank
you,
you,
guys.
sir.
Thank you. Thank you. Take care. Bye bye.